أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على نبينا وحبيبنا وشفيعنا يوم الزحام، يوم لا ينفع فيه مال ولا بنون إلا من أتى الله بقلب سليم، محمد بن عبد الله وآله وصحبه أجمعين. Distinguished participants, ladies and gentlemen, I greet you all with the greeting word of peace. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, or good evening, depending on your location. Let us start our event today with the recitation of the Noble Quran. So allow me to invite our brother, Zarrar, to recite some noble verses from the Noble Quran. Over to you, Sheikh Zarrar.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. يا أيها الذين آمنوا اتقوا الله ولتنظر نفس ما قدمت لغد واتقوا الله إن الله خبير بما تعملون. ولا تكونوا كالذين نسوا الله فأنساهم أنفسهم أولئك هم الفاسقون. لا يستوي أصحاب النار وأصحاب الجنة أصحاب الجنة هم الفائزون. لو أنزلنا هذا القرآن على جبل لرأيته خاشعا متصدعا من خشية الله. وتلك الأمثال نضربها للناس لعلهم يتفكرون. هو الله الذي لا إله إلا هو عالم الغيب والشهادة هو الرحمن الرحيم. هو الله الذي لا إله إلا هو الملك القدوس السلام المؤمن المهيمن العزيز الجبار المتكبر سبحان الله عما يشركون. هو الله الخالق البارئ المصور له الأسماء الحسنى يسبح له ما في السماوات والأرض وهو العزيز الحكيم.
Thank you very much, Brother Zarrar, for this beautiful and touching recitation. May Allah Ta'ala reward you abundantly, inshallah. Distinguished participants, ladies and gentlemen, my name is Ahmed Rufai, Head of Compliance at IIFM. On behalf of the IIFM Board of Directors and the IIFM team, under the leadership of Honorable Mr. Ijlal Ahmed Alvi, I'm pleased to extend our sincere greetings and welcome all of you. Over 200 people have registered for today's event, for today's webinar. Thank you all for taking the time to join us and be with us today. The aim or the objective of today's webinar is to launch the IFM Annual Sukuk Report, 13th edition, 2023. IFM Annual Sukuk Reports from the issue 1 to 13 are recognized as the industry's primary source of reference and reliable information on the global sukuk market because, one, it provides accurate and validated reliable data information for the sukuk market and sukuk issuance worldwide, in addition to awareness of sukuk. Number two, it also provides a detailed analysis of information in domestic sukuk issuances as well as international issuances, sukuk structures, and types of sukuk issuers. Number three, it contains very useful and important report on sukuk issuances by countries, in addition to case studies on prominent and landmark sukuk issuances, an article on sukuk market developments. These three elements combined certainly make the IFM Sukuk reports a very unique source of information that one should have and keep in one's library or bookshelf for quick reference. Distinguished participants, ladies and gentlemen, among the findings of this year's IFM report, one, the global sukuk market has maintained its attractiveness to issuers, investors, and many market participants. This can be seen through steady and stable sukuk issuances from well-established and emerging sukuk issuing jurisdictions. Number two, global sukuk issuance in 2023, particularly long-term sukuk 15 to 50 years, by sovereign and quasi-sovereign entities from Malaysia, Indonesia, and the Kingdom of Saudi Arabia, reached a record level of USD 212 billion. This figure represents a 16% increase compared to the previous year. Number three, ESG. Environmental, social, and governance-linked sukuk issuances are on the rise. According to market estimates, the outstanding amount of green and sustainable sukuk will reach USD 40 to 45 billion by year-end 2025. No doubt, this is a positive development in sukuk market. Honorable Mr. Ijlal Ahmed Alvi, the CEO of IFM, will elaborate, will provide more detailed information about the findings in his key highlights of the report presentation, inshallah. Respected ladies and gentlemen, the role and contribution of the IFM in facilitating the development of sukuk globally is not only limited to the publication of its annual sukuk reports, but also goes beyond that. In the year 2020 and 2021, respectively, IFM has published two comprehensive sukuk standard documents, namely Sukuk al-Ijara standard documents and Sukuk al-Mudaraba Tier 1 standard documents, which are widely used by the Islamic financial institutions worldwide. We all know that the most commonly sukuk structures are solely based on beneficial ownership, of the assets means transferring beneficial ownership of the assets to the investors, not the ownership of the assets themselves. Whilst the legal title is retained by the originator or trustee. Therefore, IFM strongly believes that in order to achieve diversification in Sukuk issuances, it is important that industry, particularly industry participants, collectively make strong efforts to issue asset-backed Sukuk as an option as well. However, the relevant difficult issues in this regard need to be taken into consideration and addressed. For example, the availability of fully transferable assets. This is important. Structuring as issues. This is important. Legal challenges, especially title transfer legal requirements. This is important. The investors' appetite for asset-backed Sukuk, which is a factor that cannot be ignored. Finally, the risk management of the underlying asset itself, which need to be addressed properly. This is our view, and we think and believe many market participants will agree with us on this. IFM is currently exploring a much needed relevant Sukuk structures, such as hybrid Sukuk, etc., to be standardized in consultation with all market stakeholders. To date, IFM has published 19 comprehensive documentation and product confirmation standards, as well as related guidance notes across 4 key areas, namely liquidity management, Islamic hedging, Sukuk, trade finance, funded and unfunded transactions. IFM has its own Sharia board consisting of renowned scholars with vast, extensive knowledge and experience in contemporary financial and banking transactions. In the process of drafting IFM comprehensive documentation and product confirmation standards, IFM uses the AOF Sharia standards and other Sharia standards issued by fiqh academies and reputable Sharia bodies worldwide, without exception, as a basis and fundamental source for any Sharia-related issue. In order to achieve Sharia compliance, harmonization, unification, and universal acceptance of the standard agreements issued by the IFM. So please do visit the IFM website for all these and other publications. Distinguished participants, ladies and gentlemen, today, along with the launch of the IFM Annual Sukuk Report, we will also discuss very interesting topics in company with high regarded industry experts. The discussion will include topics such as global Sukuk trends in 2023, unlocking the potential of asset tokenization in Islamic finance, Islamic social finance, cash Waqf linked Sukuk from Indonesia. Number 3, ESG, consideration and Sukuk market development. So if you have any question during the presentation on any of the discussion topics, please feel free to write them in the question box in your Zoom control panel. Inshallah, we will bring them up and answer them at the end of the presentation. IFM Annual Sukuk Report will be available on the IFM website, as well as today's event will also be available on IFM's YouTube channel, both after the event, inshallah. Without further ado, let us begin with the functionalities for today. It is a great honor for me to invite His Excellency, Honorable Mr. Nick Mohamed, Director General, Labuan Financial Services Authority, Malaysia, and IFM Vice Chairman, to deliver his opening address. Over to you, Tuan Haj. Tuan Haj Nick, over to you.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. Thank you, Brother Dr. Ahmad Rufai of the IIFM. Your Excellency, Dr. Sami Al-Suwailem, Acting Director General, Islamic Development Bank Institute. Excellency, Dr. Ghiath Shabsigh, Secretary General, Islamic Financial Services Board. Respected Brother Ijlal Ahmed Alvi, Chief Executive Officer of the IIFM, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a good day to all. Alhamdulillah, it is an honor to participate in this year's IIFM Sukuk Report webinar. I extend my gratitude to the International Islamic Financial Market, IIFM, for organizing this event and giving me the privilege of delivering the opening address. This annual publication is a cornerstone resource reflecting the evolution and achievements of the global sukuk market. I extend my heartfelt gratitude to the IIFM team and contributors for their dedication in delivering this invaluable resource for market participants and market policies alike. On behalf of the Labuan Financial Services Authority, proud founding member of IIFM, I commend the organization for its outstanding contributions, with 19 industry standards published across sectors, including liquidity management, hedging, and sukuk. IFM has significantly bolstered the Islamic financial industry, providing the much-needed structure and guidance. These standards are vital tools that provide clarity and uniformity, helping to strengthen the foundation of Islamic finance globally. Ladies and gentlemen, today's webinar is more than a routine discussion. It's a celebration of Sukuk's remarkable journey. From its humble origins as a simple financial certificate, Sukuk has evolved into a dynamic instrument that underpins large-scale infrastructure projects, sustainable initiatives, and financial inclusion. Its journey mirrors the growth of Islamic finance itself, steadfast, innovative, and deeply rooted in ethics. In 2023, Islamic finance edged closer to an extraordinary milestone, with total assets nearing the $5 trillion mark. According to the ICD LSEG Islamic Finance Development Report 2024, Islamic finance assets posted double-digit growth of 11% to come within touching distance of that mark, hitting $4.9 trillion in 2023. Sukuk alone achieved a stellar performance, growing by 9%, with outstanding issuances surpassing $863 billion, driven by increased sovereign offerings, contributions from non-traditional markets, and a surge in green and sustainable sukuk. However, as much as we celebrate this achievement, we must also acknowledge the challenges that persist. The sukuk market still faces hurdles such as limited geographical reach, fragmented standards, and complex issuance processes. To address these, I propose focusing on three critical areas: digitalization, sustainability, and governance. The first focus area is digitalization. The rapid advancements of artificial intelligence, AI, blockchain, and tokenization. AI, for instance, democratizes investment in offering personalized financial advice at scale, making financial literacy and planning accessible to a wider audience. Blockchain, on the other hand, enhances transparency and security by creating immutable transaction records. Additionally, tokenization, powered by blockchain and smart contracts, transforms traditional assets into digital tokens, allowing for fractional ownership, increased liquidity, and seamless cross-border transaction. Together, these technologies are revolutionizing the way financial services are delivered, offering new opportunities for both issuers and investors. The global market for tokenized assets, currently valued at $186 billion is projected to exceed $10 trillion by the year 2030. Yet, Islamic finance has only begun to scratch the surface of this immense potential. This gap presents a global opportunity for growth and innovation. Secondly, technology's revolutionary possibilities are continually being discovered. We need to use it to create a capital market that is accessible, inclusive, effective, and long-lasting. Islamic finance and sustainable investing share core principles, thus complementing each other as a means of both capital raising and investment. Sukuk can play a key role in funding environmentally and socially impactful projects such as Green Sukuk for renewable energy and Social Sukuk for poverty alleviation. Incorporating sustainability into Islamic finance helps address global challenges like climate change while fostering financial inclusion. By channeling funds into projects aligned with Sharia and ECG criteria, Islamic finance can drive sustainable development and promote resilience during financial crisis. Finally, governance remains the cornerstone of any thriving financial system. As Islamic capital markets continue to grow, strong governance frameworks are essential for maintaining market integrity and investor confidence. Recent regulatory developments in countries like Bangladesh, Malaysia, and Tanzania demonstrate the global commitment to enhance Sharia governance and promote Islamic capital markets. However, the digital finance space still lacks consistent regulatory standards, particularly for tokenized assets and digital sukuk. Establishing clear and globally accepted guidelines will be crucial to unlocking the full potential of digital Islamic finance. This is where IFM can play a transformative role. By introducing standards for Islamic digital assets and exchanges, IFM can guide the industry towards a future that seamlessly integrates innovation with Sharia compliance. The creation of this standard represents a major step forward, and we hope that in the near future, more groundbreaking standards will emerge, further advancing the sector's digital transformation. In line with this, allow me to briefly highlight Labuan IBFC's effort in driving innovation within the digital capital market. Since the launch of the Islamic Digital Asset Center initiative in 2022, Labuan IBFC has spearheaded several breakthrough initiatives. We have established a robust ecosystem, beginning with the establishment of digital exchanges powered by blockchain technology, the issuance of Sharia pronouncement on Islamic digital-based solutions, and the development of guidelines for securities tokens. These milestones were followed by the successful tokenization and listing of Sharia-compliant securities token, further solidifying Labuan IBFC's position as a pioneer in innovative Islamic finance solution and a catalyst for global financial inclusion. And today, with much excitement, I am pleased to share that these Sharia-compliant securities tokens, known as RAMZ, meaning token in Arabic, have now achieved a combined market value of $1 billion. Alhamdulillah. Ladies and gentlemen, I have now come to the end of my speech. Digitalization, sustainability, and governance will be pivotal in shaping the future of Sukuk and Islamic finance. These pillars, deeply rooted in the principles of Maqasid Sharia, ensure that our financial practices remain aligned with both ethical values and social responsibilities. I am cover understanding, but also inspire collective action towards realizing this shared vision. As we proceed, let us be reminded of the timeless guidance in the Holy Quran in Surah Ma'idah, verse 2, that reads, "Cooperate with one another in goodness and righteousness, and do not cooperate in sin and transgression." Wallahu a'lam. Allah knows best. With that, I wish you a productive and insightful session. Thank you very much for your kind attention. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
وعليكم السلام ورحمة الله وبركاته. Indeed, وتعاونوا على البر والتقوى ولا تعاونوا على الإثم والعدوان. Thank you very much, Honorable Vice Chairman Tuan Hajinik, for this important and inspiring speech, excellent advices and recommendations. We really thank you for this and wish you all the best, mashallah, for good innovations, mashallah. It's
MashaAllah, thank you very much.
known in Malaysia, negara kita ni, we know, mashallah.
Alhamdulillah.
Jazakallah khair.
Sama-sama.
Okay, terima kasih. Secondly, ladies and gentlemen, it is my great pleasure and honor to invite the renowned, highly respected, eminent scholar and recognized expert in the industry, our Sheikh, His Excellency Sheikh Dr. Sami Al-Suwailem, Acting Director General, Islamic Development Bank, to deliver his keynote address. Ahlan wa sahlan, Fadilat Sheikh.
Thank you very much, Dr. Ahmed. And thanks to all colleagues. Bismillah ar-Rahman ar-Rahim. Excellencies, distinguished guests, Assalamu alaikum wa rahmatullahi wa barakatuh. I commend the consistent and continuous performance of the IIFM to enlighten the industry and the stakeholders and provide reliable information that would guide the decision makers, investors, and policy makers into, inshallah, the right direction. Special thanks to the chairman of the board of IIFM, His Excellency Brother Khalid Ahmed, to the chief executive officer, Brother Ijlal Alvi, to all the colleagues and the team working with IIFM who are with us or even behind the scene, the unknown soldiers who are behind this commendable work. The Islamic Development Bank, as we all know, is committed to support the Islamic finance industry in member countries and worldwide. And in particular, it is committed to support the infrastructure institutions of the industry, like the IIFM, IOFI, the IFSB, SIBAFI, and other important players that guide and develop the standards and the frameworks and the guidelines for proper and consistent progress of the industry. As the report shows, there is about 840 billion outstanding sukuk worldwide, which represent roughly 25% of the Islamic finance industry. The majority of these sukuk are sovereign or quasi-sovereign, more than 70%, whether domestic or international, they are sovereign or quasi-sovereign, which shows that the market is relatively concentrated. Actually, 93%, as per the report, of the 800 billion are issued in markets in few markets: Malaysia, Indonesia, the Gulf, and Turkey. But as the report has highlighted, there are remarkable development shows the diversity or the diversification of the industry. For example, the green and sustainable sukuk, of which the Islamic Development Bank is a leader in issuing sustainable sukuk, they are expanding and growing. Long-term or long-dated sukuk, actually the report reports some of them were 90 years or something. These are remarkable progresses because, as we all know, Islamic finance tend to be more in favor of long-term rather than short-sighted financial decision. Now, we all know that the capital markets are vital for robust economic progress and growth. The Sukuk market obviously is one important dimension of the capital market, although the majority of these Sukuk end up in a debt structure. Now, that is not necessary, that doesn't have to be the case. Sukuk could be debt, could be non-debt, as clearly stated by IOFI standards. We also know that Tier 1 Sukuk are non-debt by design. Hybrid structures also, there are many hybrid Sukuk structures that would allow debt and non-debt at the same time. So this is one important dimension that the Sukuk market could grow in order to enhance the diversity of the market. Now, I would like to highlight one important thing. The dichotomy of debt versus equity is actually a false dichotomy. There is a whole continuum between debt and equity. Partnership impact, I mean, if we specifically focus on risk sharing, then risk sharing is broader than equity. Equity is only one form of partnership financing. Partnership financing is actually wider and broader. For example, the investment accounts in Islamic banks, they share the risk of the assets of the Islamic bank, but they do not share the liabilities of the bank, and therefore investment account holders are not equity holders or shareholders of the bank. Tier 1 papers, for example, they are not equity holders. I'm sure many of you are familiar with simple agreements for future equities that are used to finance startups and, small and growing fintech companies. These agreements, by design, they are non-debt, and before conversion to equity, they are partnership, but they are not equity. So partnership is actually broader and wider than equity. In fact, we know Zarrar, output sharing, there are revenue sharing. So equity is only one subset of partnership or participatory financing. We should keep this in mind, because this dichotomy between debt and equity is actually restricting the opportunities to develop risk-sharing sukuk that are not equity. So there is a huge potential for risk-sharing papers actually with tenors that are non-equity, but they are non-debt as well. So there is a room for creativity and diversity in structures. Let me highlight one important form of risk sharing that have not yet been fully developed, but has been proposed by Nobel laureates in economics. These are GDP-linked bonds. These are bonds, although they call them bond, they are actually shares. They are shares in the GDP. So the holder of this bond is actually holding a claim against the GDP of the issuing country. This was proposed in the late 80s, most notably by Nobel laureate Robert Shiller, who called them trills because the GDP of the US is 60 plus trillion something. So he was suggesting that one bond would be 1 trill. The point is that the hold or the investor in this kind of bond is actually sharing the upside and the downside of the GDP of the issuing country. As Robert Shiller remarks, countries should replace much of their existing national debt with shares of the earnings, quote unquote, of their economies. This would allow them to better manage their financial obligations and could help prevent future financial crises. It might even lower countries' borrowing costs in the long run. The Bank of England issued a book on this, and one chapter written by one of the authors talked about GDP-linked Sukuk. So this is an opportunity for helping member countries, particularly that the debt levels in many developing countries have reached alarming levels. These debt levels are very dangerous, and there has to be something. We have to do something in order to help countries reduce or mitigate the levels of debt that they are facing. Now, there is one important thing here. The problem with these kind of papers or bonds or sukuk is that they are heavily dependent on data. Because when you say this is a GDP-linked sukuk or bonds or papers, that means depending on the numbers, the statistics that are produced, the return to investors will be calculated. But we all know the challenges surrounding statistical data. GDP data usually are revised actually multiple times. So there is an issue of confidence. How could investors trust that the figures will not be revised later on, whether upward or downward? And there is obviously a conflict of interest when the borrower is actually the one who issues the data based on which, when I say the borrower, I mean in the broader sense, which means the beneficiary or the finance or the seeker of the financing. Now, one way out of this is the blockchain technology, as His Excellency Mohamed has highlighted. Now, if we build a blockchain network of producers, consumers, wholesalers, and retailers, we can get a stream of reliable, verifiable information, not only on current prices and quantities, which are the components of the GDP, but also on the expected growth of the real GDP and the expected inflation, which are the key figures, by the way. Investors care about the expected inflation more than about actual inflation. That's what the data on actual inflation are helpful only in as much as they help predict future or expected inflation. So this kind of blockchain network can provide reliable data for the authorities and for stakeholders. And with this network, we can add or integrate smart contract that once the data has been verified by the network members, then automatically the return to investors will be calculated. So now, from Sharia point of view, this would require, in my opinion, a new kind of contract. It's something I don't think this is very familiar, and we have to be open-minded enough to consider new legal structures that would accommodate this kind of sharing at the global level, which I mean at the economist level. Now, the point is that the key for the growth of the industry, whether this is the capital market or the industry overall, is diversity. Without diversity, the market will stagnate. It cannot a homogeneous industry cannot continue. It can grow for some time, but then it will stagnate. The key for consistent and robust development and growth is diversity. And that's why we need innovation. Innovation brings diversity, and with innovation, we need new markets. So you can see we need diversity of issuers, diversity of investors, diversity of, obviously, of markets, and diversity of structures of these instruments. With diversity, the market has the potential to continue growing, inshallah, in the right direction. Let me reiterate our appreciation and gratitude for IIFM for this commendable work. Thanks to all for listening. Wassalamu alaikum wa rahmatullahi wa barakatuh.
MashaAllah. Wa alaikum assalam wa rahmatullahi wa barakatuh for the Sheikh. Thank you very much. Hello. Thank you very much, Sheikh Dr. Sami, for this well-taught keynote address and for this very insightful and useful knowledge for the Islamic finance industry and its future aspiration. We always keen to listen to you and learn from your wisdom and knowledge. Jazakallahu khairan. Thank you very much, my Sheikh. Ladies and gentlemen, now it is my great pleasure also to invite His Excellency Honorable Dr. Ghiath, Secretary General, Islamic Financial Services Board, IFSB, based in Malaysia, to deliver his special address. Over to you, Honorable Doctor.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam.
Dear brothers, sisters, ladies and gentlemen, distinguished guests, it is really both a privilege and a pleasure to address all of you here today at the launch of the IIFM Sukuk report for 2024. I'm also thankful for the IIFM for inviting me to address you. So on behalf of the IFSB, I would like to extend my heartfelt congratulations to IIFM on the successful publication of this year's edition of this really very important report. The IIFM, since its inception, has played a very important role and central role in the standardization of Sharia-compliant contract, financial contract, and product templates. Furthermore, the IIFM has become a global platform for robust dialogue on issues concerning the Sukuk industry. This meeting today is a good example of that. So really, congratulations again to the IIFM on great achievement over the years. The Sukuk market, as we've heard so far from my colleagues, has grown up significantly over the past 2 decades, and really is becoming an integral part of the Islamic financial services industry. It has attracted a global interest from both sovereign and corporate issuers and investors. The Sukuk industry so far has served an important source of financing for infrastructure projects, government funding needs, liquidity management, and sustainable, and more recently actually, more sustainable and social initiatives. And they are a very good example of that. It showed innovation. It showed quite a lot of vitality, particularly in the face of financial crisis that we have seen in the past 2 decades. Now, while this trajectory is promising, it is also crucial to acknowledge the barriers that continue to hinder the market from realizing its full potential. And I think we've heard similar discussion from my colleagues who spoke before me. Many of you, or maybe some of you, will recall that the high aspiration in the early 2000s of where the industry would be today, in the trillions of dollars in terms of assets. So notwithstanding the progress so far, the Sukuk industry still accounts for a little more than a quarter of the Islamic finance assets. And we all agree that this is well below the industry's potential. What is remarkable actually is that this somewhat underwhelming performance contrasts sharply with the very high demand for Sukuk that we see around, and the sizable pool of funds that could be tapped on. Enormous amount of pool of funds. Everywhere I go, I'm asked, where can we invest our funds in an Islamic Sharia compliant way? Unfortunately, the demand-supply gap remains wide, very wide. Not only this, but the market has not produced a regular issuance and regular terms and uniform terms. Issuance remains irregular and terms remain limited. A deep and liquid Sukuk market is critical for the development of a vibrant and balanced Islamic finance ecosystem. It is truly critical for the future of Islamic finance itself. Market depth offers greater liquidity, reduce price volatility, attracts a broader and more diverse investor base, provide more risk management tools, and many other benefits, which will all contribute to financial stability, financial deepening, and ultimately economic growth for our societies and for the globe in general. The reasons for this development are mostly structural. My colleagues have touched upon some of these issues, and I would like to focus on two of them today. Over the past 2 decades, since the industry's inception, the industry, for some reason, has adopted complex structures. Having seen a lot of a concerted effort to develop simple, plain vanilla type instruments. The complexity of Sukuk structure has pushed almost all of the Sukuk industry into the highly structured or even exotic part of the capital market, whereas this should be the exception. In normal capital market, structured exotic instruments are really on the fringe. The bulk of the market, 80-90% of it is really in the plain vanilla part. Moreover, because of complexity, significant Sharia issues remain unsettled and subject to extensive debate still, and is largely reflecting the complexity of the Sukuk itself. These features reduce Sukuk attractiveness to issuers and investors and limit the industry growth. I personally had conversations with issuers, companies, and others who could really be a good source of Sukuk. They all tell me it is too expensive to issue. It is too cumbersome to issue. Why should we do that? We go to an Islamic bank, we get financing directly, end of the story. The other factor that I would like to highlight is the lack of government commitments that I have seen around to develop Sukuk issuance program in local currencies, comparable to what they issue in conventional bonds. Yes, sovereign Sukuk has dominated Sukuk issuance, but a good chunk of that is really FX sovereign rather than local currency Sukuk sovereign. This is in part due to the complexity of the Sukuk structure that diminishes the appetite of public debt managers for issuing them. I've spoken to many debt managers in the Ministries of Finance and Treasuries, and they told me it's really a headache to manage the Sukuk issuance and the liability that come out of them. Not only this, but the Sukuk structure also in many places have created political concerns about using government assets to underpin the issuance of Sukuk, whether these are privatization or not, whether these are surrendering government instrument or not. Not only this, there is a limitation to how many Sukuk you can issue by governments using the existing structures. Unfortunately, the local currency government Sukuk market is really the cornerstone, the anchor of any capital markets. A deep liquid local currency Sukuk market or debt market in conventional finance with regular program issuance, what we call program issuance, at the all point of the maturity curve, provide the basis for the market to develop. It's the basis upon which private market developed. It provides confidence to investors. We have problems now with liquidity management. People are buying Sukuks and holding it. Well, they don't know if more Sukuk are going to be issued. Program issuance solve these problems. And then those who are holding Sukuk will be more encouraged to use them for liquidity management rather than for investment or precautionary purposes. I personally believe that the Sukuk market has enormous potential of transforming the Islamic financial industry and our economies in general. I truly believe in that. Unfortunately, I see these impediments that could hinder that growth. And we need to have concerted effort to solve these problems. Come up with a plain vanilla type solutions that are fully compliant with Sharia, does not raise Sharia concern. And for our governments, for our membership governments, to start issuing sukuk on a program basis, in a simple plain vanilla basis, at par with the programs they issue for government for bonds. With these, I see enormous potential. Sukuk also, if done properly, can offer global solutions. One good example of that is the problem of greenwashing. We know that green bonds movement has tapered down and slowed considerably in the past 2-3 years. In good part because investors start asking questions where the money is going to. That's what we call greenwashing. And no matter how greening verification done by third party, it cannot verify where the money is went. Now we know that Islamic finance is heavy on documentation. If done properly, they have to register the buy and sell transaction, the buy and lease transaction. All the other contract has to be invoiced and recorded. Now, that used to be a cumbersome process for Islamic finance, especially the banks. But nowadays, we call these data as big data. And they provide enormous opportunity for issuers of green bonds to provide the information that investors need to assure them that their money is used for green bond. And this is just one example, but there are many opportunities where Islamic sukuk market could provide solution for the global world. So with these challenges, I'm sure we will overcome them. And the work of the IFM is very critical in this regard. And the way they bring together, facilitate meetings like this, and the reporting they do, and the monitoring they do is really important. And we congratulate them on that. At the IFSB, we are starting a new strategic cycle next year. And a key focus of our work going forward is the non-bank financial sector, in particular the sukuk market. So we look forward to cooperating with our sister infrastructure organization, with the IDB, and with all of you to improve and bring the sukuk market to its potential, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Dear Honorable Dr. Ghiath, thank you very much. Thank you very much for this important and well-thought informational speech and the encouraging comments on the IFM tireless efforts to contribute in the development of the Islamic financial industry. So thank you for that. Really appreciate. Ladies and gentlemen, now I will turn the time over to Honorable Mr. Ijlal Ahmed Alvi, CEO of the IFM, to announce the launch of the Sukuk Report 13th edition 2023 and to present the key highlights of the report. Over to you, Mr. Ijlal Abu Maham.
Assalamu alaikum wa rahmatullahi wa barakatuhu.
Alaikum assalam wa rahmatullahi wa
barakatuhu. Really thankful to all of you for joining us today, the distinguished speakers, the contributor of this report, the sponsors, and all the attendees. My throat is today is not, completely there, but inshallah, we'll manage this. And really grateful for, excellent, remarks and opening remarks by Brother Nek, Sheikh Sami Al-Suwailem, Brother Ghiath, who I know for a long number of years, and really very pleased to learn, their sort of suggestions, their recommendations going forward for IFM and for the industry. Also, appreciation to IFM team for putting together this report. So there is a small clip which we will now run. And after that, I will, inshallah, quickly go through some of the salient features of this report, inshallah, with Allah Ta'ala. So with that, my team will now run this. Inshallah, just I will now put my presentation. Just allow me. Wait. Just give me 1 minute. Inshallah, I'll be with you. 1 second. Tariq, 1 second. All right, inshallah. Let me begin with just going over the overall. If we see, यह कहाँ पर चला गया है? मेरी वीडियो गायब हो गई। नहीं, वो सबको आप ही लग मैंने बंद की हुई है। वॉइस भी शायद बंद की हुई है। नहीं, ऑन है। All right. So technology sometime can, you know, play a, in this case. So what we see, if the total issuances for the year 2023, of course, getting together data is a huge task. And this time we are grateful there are several new in the sense who basically assisted us, some regulators, some exchanges, commissions, and also some information provider, mostly regulatory bodies or security commissions, who have really helped us put together this data. So they naturally rely on verification process, which sometimes takes time. And like Dr. Al-Suwailem rightly mentioned, if you bring in the technology, if we can improve that, naturally this will greatly assist not only this report, but looking at overall, Sukuk development, Sukuk structuring, Sukuk, creating more transparency, bringing more sort of diversification, all these things. Of course, smart contract was also mentioned, which is rightly one thing. Brother Nick also mentioned certain things which are really very helpful, and we look forward to working on. And also from IFSB, Brother Riyad's, suggestions. We really inshallah, going forward, we'll try to work, collectively on those. If we sort of see that 2012 16% increase is more sort of a market which has now, we have seen that there are sort of in some other jurisdictions which are previously established jurisdictions like Malaysia, like GCC, in particular Bahrain or Saudi Arabia or UAE, Qatar, Oman, and other countries, also Indonesia, also and various other countries which have done. And then we have new entrants which are also playing, a role. Turkey is not a new entrant, but yes, they have, also contributed, and also African region. So this is all, what we have seen, this increase of 16% to 212 billion is to that. Total issuances for since inception over a little over 2 decades is about 2 trillion. So, and then if we sort of look at overall, our sort of looking at the short-term market, it's rightly mentioned that long-term market is really what we are, look at it. Of course, short-term, I will explain, is also important, but looking at the long-term is something which rightly mentioned by Dr. Al-Suwailem also. That is where we look at it, and we have seen that its contribution overall, if you compare it with the short term, is around 66% is long-term market. So this is something which we see continuation of development of long-term market. if you look at international, and these are sukuk which we, you can see in the glossary how they're defined. These are hard currency sukuks or mostly dollar sukuks and others, which are basically sort of a backbone. And there are also, this year, we have seen in 2023, there is an increase. In 22, it could be, the market, the overall global economy with Islamic finance is linked. It could be the reason at that time and the overall requirements that it kept the international market of Sukuk, lower for last year. But this year, alhamdulillah, we have not seen, if you do it in the percentage term, is 47, which looks quite, but overall potential, like rightly mentioned previously also, is much more. But we have reached 50 billion, and I will mention about the distribution between the long term and short term now. It will come after this. If you look at it, overall international sukuk, their contribution, of course, is driven by sovereigns, 35%. We have seen the increase from the corporate side. Still, potential is much more. 19, we have seen financial institutions. I will mention what kind of sukuk they are issuing of late. And also Qausi-Sovereign, which are highly important also. So these are the four sort of a main segment which we have sort of in our report we have defined. Now, this is your sort of short-term sukuk versus long-term. So you have 41 billion of long-term sukuk, 11.54 is short-term. So I will mention, the main contributor for that. But we can see clearly that you have much more short, long-term sukuk being issued. If you see domestic markets, of course, plays a very important role. And we have seen the continuation addition of, several new countries, several new regions, which have also joined countries based there, or the issuers based there, both, sovereign level that we have seen. So that is something is there. Of course, if you look at from the international sukuk issuances, we have new entrant, which was Philippines and also Egypt. So they have issued, sukuk in the sovereign sukuk international market. We have in the domestic market development, we have UAE, which has started issuing sukuk, and those are 2 to 3 year sukuk. So these are sort of sukuk and development and several other, time doesn't allow me to go through all the details, which you can inshallah read, which we have put together in the chapter 1. So this is where we can see clearly that, the domestic market is continuing to grow in the various regions, various jurisdictions, which is helping the, overall growth of the sukuk market. And it has reached around, we can say 160 billion, 159.4 to be precise. And overall domestic issuances since inception comes to about 1.5 trillion, which you can clearly see, the role which domestic really plays in the sukuk market. So both are very important. International still, I think there's much more scope, and also as well as domestic. And you can see the share. And domestic market are driven by mostly sovereigns, 74%. That's a high percentage. If you see corporate role still, overall, if we see total, which means, overall, not any specific country, is only 15% for corporate, 8% for financial institutions, and Qausi is a very minimum 3%. This is your domestic market share. So you have 98 billion, which is coming from your domestic long term, and 61 billion is coming from your short term. And distribution wise, 62% is from your, should be 62% should be long term, and short term should be 38. So I think we need to make a correction here. We have seen in 2015 that overall, the drop, if you see, and last time also I mentioned very briefly, this was nothing to do with anything going wrong with the sukuk market. Sometime we have seen in certain jurisdiction, there is some strategic change, which is good for the industry. moving from, let's say short-term market was more for, it's more now for liquidity management. But previously it was for investment also, especially for Malaysia. So that, drop is not really something which we can worry about. You can see clearly the market since then has really picked up. There is nothing wrong. It just has to take decisions which sometimes, in some cases, not often we see this, but that can happen. But that is overall is good for the industry, as we can see. This is your global short-term Sukuk issuances of 72 billion. So it's showing increase of about 16%. Similar increase we had last year also, alhamdulillah. This chart, why we have included, is just to signify that short-term Sukuk now in international market for dollar-based or maybe few or euro maybe. Generally it's euro, it's a dollar, US dollar. It's basically first Bahrain started doing it till 2008. From 2001 to 2008, Bahrain issued short-term Sukuk in hard currency. Then they stopped. So that's why sort of you can see there was nothing. Then we see this, issuances and keep on increasing is from ILM. So that's why I included this chart just to signify that what you need, and like previously mentioned, you have much more sort of demand side is still much more. So it's not really yet meeting that demand for the Sukuk, overall if we look at it. So this is on that. Then we see domestic short term, which you can clearly see. It's also increasing. Not only in Malaysia, we have seen domestic short-term Sukuk issuances from various other countries, including Indonesia. You can have now, also Turkey is also issuing. Mostly domestic short-term, we can see is for liquidity management. But we have seen for short-term Sukuk issuances also by certain SMEs based particularly in Indonesia and also Turkey, which are issuing. So mostly what we see domestic short term is for liquidity management, but then you can see now there are sort of SMEs and maybe some corporates could be which are issuing short term Sukuk, which is good for overall diversification and development of the market. Now, if you look at the breakup of issuer status, global sovereign issuances is increased 22% as compared to last year. So their share is naturally, like I mentioned before, also is always higher as we go along. I know in 10, 15 years ago, we used to say that sovereign should take a lead, and that's what happened. And then they are continue to lead. But then having said that, we have to see, others, three sectors which we have mentioned, corporate, FIs, and also Qausi-Sovereigns, which they play their role to also have potential to increase the issuances to more sort of issuers come to market, given the demand. And this is the global Qausi-Sovereign. The Qausi-Sovereign generally could be power companies, could be road network, could be sort of other, which have been continuously issuing, which could be, I know financial crisis time, there was an issue of implicit guarantee versus explicit guarantee for Qausi-Sovereign. And this issue was highlighted at 2007, 2008 financial crisis, that this things to be really transparent. So I'm sure if you see the prospectuses and all, one can see this important aspect, whether government is explicitly mentioning or it's just implicit. The government, there is no government guarantee in that case. It could be just the sovereign, Qausi-Sovereign issuing it. So this is a very important point for us to make a note. These are the corporate. Still, there is a lot more. We have a small increase of about 8% and 408 billion since issuances. So naturally, it's a long time which we reach 408. But there we see a lot of potential, and we have seen some improvement. We have seen now, smaller issuances from small and medium-sized enterprises, which basically various sectors of the economy, could be agriculture, could be manufacturing, it could be fintech, it could be other, entities in various sectors of the economy operating. They are basically have started issuing sukuk in jurisdictions I've mentioned before. So this is very important development, which we sort of see as a positive in terms of the corporate sukuk issuances. Now, if you come to FI, naturally, FIs are previously issuing maybe, more in the beginning was, based on their balance sheet requirements and all, more floating rate. But that since then has changed. We have seen tier one issuances happening, based on Mudarba concept, which is there is no guarantee in that case, and those issuances were there. But then in 2023, you had Credit Suisse, and the Swiss regulator, some say it's very surprising decision that they wiped out around 17 billion corporate from the conventional tier one of Credit Suisse. So which naturally sort of affected the tier one sukuk in the bond market side. In the sukuk space, we saw a slowdown for international. There was one issuance of which happened in the tier one, which the report mentions. And then there are continuation of issuances on the domestic level, both from the GCC Saudi in particular or UAE and Malaysia, which they are issuing tier one or tier two sukuk for capital adequacy requirements. So this is something we have seen. We have seen also it is a pretty flat year compared to previous year. But if you see one thing which is happening that we have seen now, GCC banks, Malaysian banks, others, they are issued sukuk in ESG related. So sustainable green sukuk or sustainability linked sukuks. So that is a development we have seen in both in the international, there are some, and in the domestic currencies they have done, even from the UAE also. So this is a change which one can see and which is happening, which is also positive from the looking at this, environment side of it, looking at, the goals which we have to achieve to save our environment. So we have seen, increase, environment linked sukuk also from FIs. These are country breakups. I will not go into detail, given the time. You can clearly see. So we have, this verification, like I mentioned, takes time for us, but alhamdulillah, we managed to put together, which is a creditable data, what we have to best of, what we can achieve, inshallah. And you can clearly see the role of, Malaysia, Indonesia, other countries are playing in the sukuk market and how it is evolving, including the role played by IDB as a supranational institutions. Their share mostly is IDB linked. It's about 7%. So we had some, World Bank, some other entry, but mostly it's IDB, which basically issues, or it's IDB entities, group entities like ICT, or issues also sukuk. And they also try to do it in certain jurisdictions. They try to also encourage them to issue sukuk and this time. So that is also something which is point to note. So these are basically, when we say like country, we say China, or so one should not confuse that if it is country level, it is issued. It is basically the entity which overall its head office or operation from where it started. It could be some, other jurisdiction, like in one case was Kuwait for UAE, for US entity. It could be, because of that sort of origination, so we keep it for that country. So it's not really that country has a law for sukuk to issue sukuk, or that this is based on the entity. That's how we define. So just keep that in mind. For some countries, they may not have issued from the country level, or they may not have regulation. I hope that they do in future, inshallah. But that's something we should keep in mind. Egypt is a new entrant. Nigeria is also started issuing. South Africa, of course, we are aware. Sudan is the figure which is unfortunately it could not be updated last few years, but they had played a role in how in the future things improve. Then you can see also Turkey. You can see other supranational. Again, it's come to international sukuk, which is mostly the role of Islamic Development Bank. Sorry, and their group entities. these are regional breakups. So I will sort of skip very quickly now to my sort of structure breakup very quickly because we are running short of time and don't want to hold it, the panel who is waiting the first session, inshallah. I will quickly move on. These are the short-term sukuk structure breakup. You can clearly see this is overall global level. You can see what type of structures are being used and how it is evolving, what happened in 2023. But we have previous in the report, you can see the historical also. You can clearly see the international sukuk, so you can see clearly the difference. The role of murabaha is international is much less compared to other, like Ijara is still there, alhamdulillah, 16%, but we have seen hybrid, Wakala also 38%. We have some other hybrid also. Domestic issuances, of course, you can see, role of murabaha is higher, but it could be due to, when we have liquidity management, sometime from credit reasons, it's easier or it's more, credit reason, more, sense to do murabaha based sukuk for domestic liquidity management for short term. These are currency breakups. So if my calculation is correct, it's about 29 currencies sukuks are being issued. So this figure is increasing as we go along, and we see more, currencies, more jurisdictions actually. Actually, most of them jurisdictions are there. Of course, USD, America may not have, but USD from that context, international sukuks and contribution is 23%. Then we have Malaysia about 46%. Then other countries are also including Bahrain. This is my sort of last, which we can see from international sukuk issuances. It is 2023 is 162 billion. So what you see is a 37% because 22 we had some maturities of about 35 or 30 billion which were adjusted. So that's why you see, those adjustment has taken place in previous years, 21, 20. Also, maturities has taken place. So overall, we see 162 billion. So some maturities are refinanced. There are some new sukuk been issued. So that is the case. And this is the contribution outstandings. Of course, 57% is sovereign, and we need to see more from the corporate side, more from FI, and Qausi-Sovereign also has potential. This is domestic level. You can see a 22% increase of 117 billion. So you can see clearly outstanding domestic is 640 billion, which is as of December 31st, 2023. So that's a major chunk, which is in the domestic markets. And then you have, distribution of domestic market outstanding 61% is from sovereign and 20 from corporate. In the domestic, corporate could be more. It could be Malaysia has much more deep market. Other markets also improving now as time goes by. These are your international sukuk issuances outstanding of about 202 billion. Yeah. And so this is something which you can see clearly, and the overall figure, as we said, is $843 billion of sukuk outstanding. And these are the breakdown where you can see for the international sukuk outstanding. These are some of the things which I've mentioned, but we don't need to go into this. Given the time I had to be allocated for this purpose. With this note, I will end now this presentation, and there are a lot of details in the report, which inshallah one can read and one can benefit from that. With that note, I would like to now end my sort of this presentation and introduction of the Sukuk report. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, my brother Abu Maham, Mr. Ijlal Ahmed Alvi, the CEO of IIFM, for this detailed presentation on sukuk issuances, both international and domestic. And it is clear that through the presentation that sukuk, inshallah, are heading towards a positive and promising promising path, inshallah ta'ala. Due to time constraints, ladies and gentlemen, the first session will commence now, inshallah. So I will like to invite the Honorable Brother Ahmad Hassan from the Bank ABC Islamic Bahrain to moderate the session, inshallah. So over to you, Ahmed.
Assalamu alaikum, and thank you, Dr. Ahmed, for the introduction. Assalamu alaikum, ladies and gentlemen. It was an interesting morning. We heard many thought leaders and influencers talking about the Sukuk market, and we also heard Mr. Ijlal give us a brief synopsis of the IIFM Sukuk report for 2023. I think some of the key points that came out in the sessions earlier today when Mr. Nig spoke about digitization, innovation. We had Dr. Sami Al-Suwailem talking about diversity, innovation, again, digitization and the role of fintech. Dr. Ghiath talking about the supply-demand gap, complexity of structures, and lack of support in local currency issuances. So today's session, the one that we have an esteemed list of panelists with us, will be talking mostly about the global Sukuk market trends, but we will try and bring some of these points which came in the earlier sessions into the discussion, though I believe each one of these points can have a separate session on its own. But we will try definitely to bring some of these points in because there were some very interesting and useful discussion points and thoughts that came in. But before I go into the session itself, I would just like to take a couple of minutes and talk a bit about IIFM. I think IIFM, since its inception and over the years, has played a very important role, a gap which was there in the Islamic finance industry in terms of setting standards and standardizing the documentation. I think there's a lot of work, good work that has gone into on this side by the organization. IIFM Sukuk report is another important aspect that IIFM does. IIFM has also started some very good training sessions every year and are also planning to do, inshallah, an annual conference in the coming years. The reason I'm bringing all of this up is that we have a lot of decision makers and influencers within the organizations that are attending today. So any industry body like IIFM can only continue and survive and do well with the support of the industry itself. And I would encourage and ask each one of you to provide that support to IIFM for the critical role that it is providing to the Islamic finance industry. And this can be done in many ways by those who are not members to join IIFM as a member, those who are already members to enhance their memberships, or who are members or have enhanced memberships to basically support IIFM in various different initiatives that it initiates. And by support, I mean specific financial support. That is what the organization, any industry body would be looking from the industry participants. So apologies for bringing this up, but as a board member of IIFM, I thought it's an important forum, and this is a point that we have always discussed in board meetings, and I wanted to take a few minutes to talk about that. Without further ado, let me come to the session that we are today going to be talking about, and let me introduce the panelists that we have with us today. We have Mohamed Hamid, who is the Chief Executive Officer of IILM. We have Hassan Ali, Managing Director, Head of Islamic Origination for Standard Chartered SADC. We have Mr. Sabri Yunus, who is the EVP Treasury and Strategy for Waqf Qatalem. So he's joining us from Istanbul. We have Khalid Al-Ruqayis, Executive Manager, Capital Markets, Kuwait Finance House. We have Nadia Zubairi, who is the Head of Debt Capital Markets for Bank ABC. And we have Salman Ahmad, who's a partner, FIs and Capital Markets for Travers and Hamlins. So we have a fairly diverse group of colleagues. I would request all the panelists to open their cameras so everyone can see them as well. And during the session, if you have any questions, please put them on the Q&A chat, and we will try to take those questions towards the end of the session. I think we've all established and seen that how sukuks, the sukuks or the Islamic capital markets have grown over the years, contributing around, as established by Ijlal, around 25% of the total Islamic assets as it stands today. We have seen some trends and largely the international sukuk market being dominated by sovereign issuances. Corporates we do see coming in, but not as much as one would like to see. So we will try and cover this topic today as we talk about the trends. We will definitely try and talk about market supply, demand, pricing issues. We will also try and cover market innovation and some of the new structures that we are talking of. And whilst all the good things that are happening in the capital markets, we will also try to see what are potentially some of the concerns or the threats. I think what Dr. Ghiath mentioned in terms of complexity of structures, etc. What are some of the things that what is coming up in terms of new standards, etc., and how, if at all, it can impact the issuances in the coming years.
Excellent.
And if we have time, we will try and talk a little bit about the Trump factor and see if this can have any impact on the Islamic capital markets. So let me start the first question towards Ehsan Ali. Ehsan, since you work for an international bank, we would like to hear, and I think the people on this webinar would like to hear your views on international sukuk markets, the trends that we have seen in 2024, and what do we anticipate going forward into the next year in the context of sovereign issuances, institutional issuances, quasi-sovereign corporates, and also maybe some non-traditional issuers. So what are the views that you would like to share on this front?
Thank you. Bismillahirrahmanirrahim. Assalamu alaikum. Good morning, good evening to all the listeners in their respective jurisdictions, countries, wherever they're based. So it's my pleasure to be here. We have been, supporting IIFM for long, and all the friends and colleagues here. Thank you for having me here. In terms of the sukuk market, so we heard Brother Ijlal talk about, the various data points and how the market behaved in 2023, because that was, I think, the report based there. Now, what we have seen in this year, 2024 in particular, I think, in my opinion, the market will surpass all previous records in terms of new issuances. I think overall, as well as in terms of international sukuk issuances, which I believe, it will further lay the ground for, making sukuk as an integral part of the international capital markets. So we have seen the growth story unfurl over many, many years. And while there were some dips and some hurdles along the way, the growth has been, consistent in terms of the overall growth in the outstanding as well as in the issuances. So in terms of the trends, what we have seen, and the reason I say that why 2024 will be a strong year is that just in the last 3 days, Monday, Tuesday, Wednesday, we saw $6 billion of international sukuk price, 2.75 billion by government of Indonesia, 2.5 billion by Turkey the next day, and just yesterday, $750 million of sustainable tier 1 by Saudi Investment Bank. So just 6 billion in 3 days, right? So I think overall the market has been strong. The reason I think for the issuances are a few. One is that Saudi Arabia continues to be one of the largest issuers. And in fact, among all emerging market issuers, excluding China, including conventional bonds and sukuks overall combined, Saudi is the largest issuer this year. So that, and obviously, there is a lot of sukuk coming out of there. The domestic market obviously is much more Islamic oriented. In the foreign currency market, in the international market, they do both bonds and sukuks, but overall that has flowed into the sukuk market as well. And that is driven by, the diversification, the funding plans required or needed in terms of Vision 2030 and things like these. So apart from Saudi, we have seen the large issuers like the UAE, Indonesia, Turkey, etc., come to the market and add onto the volumes. So it's driven by economic diversification, refinancing needs, as well as we have seen in some markets is filling up the war chest for the next year as well. So given the uncertainty now in the political landscape, what will happen to the emerging market currencies, etc., which with the strong US dollars run we have seen in the recent past 2 weeks after Trump's re-election. So I think issuers have sort of front-ended their financing requirements as well. And therefore, we have seen this entire growth. In terms of, apart from that, now obviously sovereigns have led this. We have, that has been the case for many, many years. Financial institutions also, we saw strongly come back to the market, both in terms of tier 1 issuances, as well as in terms of the senior unsecured issuances. And a lot of that came into the sustainable or green issuances as well. So we saw a lot of FIs, built up their sustainable finance framework and come through in the terms of social, sustainable or green sukuks as well. So that is another second trend we have been seeing now. The third one is also in terms of new structures added. So while the Ijara and the Ijara Wakala structures continue to dominate the international markets. But last year we saw, for example, the Public Investment Fund, PIF, we did a new structure based on equity holdings. And this is, a structure which a lot of holding companies and sovereign wealth funds can use. And we saw Mubadala using the similar structure coming up with an issuance this year, right? So in terms of the structure diversification, etc., also we are seeing new structures which do not rely on real estate assets or hard assets. So that is also we are seeing as an emerging trends in terms of diversification of structures. In terms of new geographies, while we saw government of Philippines come up last year with $1 billion issuance, we haven't seen many of the new geographies come up. The traditional geographies, as I mentioned, the GCC, Turkey, Malaysia, Indonesia, continue to dominate the international sukuk issuances, but we are hopeful that going forward in 2025, we may see some issuances coming up from new geographies as well. So I'm sure as market participants, most of us are aware of which these are, but hopefully, the geographic diversification of the sukuk market beyond its traditional strongholds, I think is a key to making the sukuk product as more internationally accepted as well. So I think these are some of the trends we have seen. To recap, I think 2024 was a very, very strong year. Hopefully, we should see some continuation as the economic diversification and funding plans and the funding requirements of the core countries continue. We will see, hopefully, in terms of the rates, while that we have seen a spike coming back into the long-term rates, we hope that these do not go beyond what they are currently, right? So in terms of new issuances or the issuances coming next year, we hope that the pricing for the issuers would remain attractive rather and not go up, because that will be a key factor, in fact, in terms of the new issuance driving factor forward. In terms of the structural diversification, I think we'll talk about the IOFI 62, and I think it will be driven new structures such as equity holdings or not hard assets, for example, receivables or services backed Ijara and stuff like that, may also be need to develop to move away from potential effects of Standard 62 if it comes into force as is drafted currently. I'll stop here and to take up any questions later when we go into the Q&A round. Thank you.
Thank you, Hassan. But just before you go, so you've spoken about the 2024 trends, and would you, in your views, do you expect 2025 to be pretty much following the same in terms of sovereigns continue to dominate? Or do you think there might be a bit more of corporate activity that we see, though? I mean, it's still small in percentage, but at least in terms of number of issuances.
I think sovereigns will continue to dominate because the funding requirements at a national level are still huge. In terms of the corporates, we have seen some growth coming in. So primarily, likes of the real estate companies, for example, the likes of quasi-sovereign. So I think the corporate will pure corporate may still be low, but I think you will see more issuances coming in from quasi-sovereign. So as the government pushes down the funding requirements to the quasi-sovereigns and make them more independent in terms of not borrowing at a sovereign level and then pushing the funding down, but allowing the state-owned entities to raise on their own creditworthiness, I think that trend is coming up. We have seen in countries such as Saudi, for example, and UAE. So as that trend continues, we will see issuances coming more at a corporate level, but it may not be pure, not say a family-owned corporate or stuff like that, but it still may be linked to the sovereign ultimately. So, but we will, inshallah, see more issuances coming in from the corporate as the economic diversification gains ground. Thank you.
Thank you. Thank you. I think we'll switch discussion a little bit away from the trends and move towards the role that Sukuks play in terms of liquidity management for Islamic financial institutions. And we have Brother Safri, who is the CEO of IIFM. And IIFM, as we all know, plays a very important role in terms of the short-term HQLA Sukuk issuances. So, Brother Safri, if you can give your views in terms of the role that Sukuks play in terms of liquidity management, and you as a repeat and a regular issuer of HQLA instruments, Sukuks, what are some of the challenges that you see in this space?
Bismillahirrahmanirrahim. Thank you so much, Brother Ahmad. Assalamu alaikum warahmatullahi wabarakatuh. It's a privilege for me to be here this afternoon, this very hot afternoon in Kuala Lumpur. Sure, it's not as hot as it is in other parts of the world. Alhamdulillah, I'm so happy to be here. And again, once again, congratulations to IIFM, Brother Ijlal and his team for yet another year of comprehensive Sukuk report, which is going to be the barometer and the trendsetter, right, for all the parties, especially the Islamic financiers and practitioners, to refer to when it comes to this, the darling of Islamic finance, if you like, the Sukuk market. So when one talks about this liquidity management, just taking a step back, one of the most important activities by all banks, Islamic and conventional, has been managing liquidities. So the importance of sound liquidity management surpasses the individual banks, and any shortfall in the liquidity will cause serious repercussions to all the banks, Islamic or conventional. And when it comes to Islamic finance, you've seen all the statistics data that Brother Ijlal had spoken to so eloquently earlier, and the growth of the Sukuk market has been in tandem with the growth of Islamic finance as a whole, right? I mean, just looking at the statistics that we are seeing, and there's just so many numbers when it comes to the size of Islamic banking as a whole. But I think we can all agree that the Islamic finance has been growing by leaps and bounds. So we are seeing, I mean, on an average basis, the size of Islamic finance has been hovering at about 4.3 to 4.5 trillion. And the report that we have seen is that the size of this growing pie is expected to hit close to about 6.5, 6.7 trillion by end of 2027. So, as Islamic banks continue to grow, as Islamic banks continue to get bigger and bigger, so will their liquidity requirements. So unfortunately, when one talks about liquidity instruments or liquidity tools in the Islamic finance space, the rate to which the Islamic liquidity tools and instruments have been developed in various key markets have been uneven. Like for instance, just like in the case of Sukuk market, where we've been seeing the phenomenon, of that 200 over billion of Sukuk, the growth has been focused on these key markets, and that has been the trend over the last decades or so. Yes, we have seen the government of Philippines issuing Sukuk. Early this year, we've seen one of, two so-called new kids on the block issuing Sukuk. But the growth has been uneven, right, when it comes to the Islamic liquidity management tools as well. So IILM was established about 14 years ago, and we've been issuing Sukuk consistently over the last 11 years and 4 months now. In fact, just like the Sukuk market, Brother Hassan spoke about this, probably a best year, right, for global Sukuk, right, Brother Hassan, this year. And you saw about 6 billion of Sukuk issued in the last, 2-3 days by Indonesia, Republic of Turkey, and Saudi Investment Bank. Ireland has also seen its asset pool grow to an all-time high, right? I mean, we have crossed that 4 billion mark in August, and we've just achieved a 4.5 billion mark 2 days ago. Yet, we are not able to fulfill the gaps faced by the Islamic banks globally, despite the fact that we have achieved, or we've gone to an area that we have not gone before, right? We have not been able to meet this ongoing demand faced or by the Islamic banks globally that have become a lot bigger today than they were a year before. And so I think our role is to continue to plug the gaps, right, by ramping up on our asset pool, which is currently in the form of long-term Sukuk, so that we can issue our safe haven, high quality short-term Sukuk, right, on a monthly basis, and we can increase the quantum of that short-term Sukuk to be able to close the gap between the demand and the supply of our Sukuk. So that will be our continuous challenge. That will also be the continuous challenge for all of us, Islamic bankers, in our efforts to grow the Islamic banks or Islamic banking industry as a whole. And from our side, from ILM side, in our efforts to be able to meet, right, the demand coming from the Islamic banks, in our efforts to make sure that Islamic banks remain competitive, remain profitable, and are able to find outlets, right, so that they can manage their liquidity better, right, as they get bigger. So let me just take a pause there, Brother Ahmad, and I'm actually quite interested to talk a bit more about this private Sukuk market, which is also growing and a phenomenon that we are growing on the other side of the coin. So, I'm able to talk about that a bit more, at the next turn, inshallah.
I was actually going to ask you that, and maybe you can continue a bit more on this to say that since, as you rightly said, that, despite the work that you have been doing in terms of continuously issuing the short-term HQLA Sukuks, but it's still not meeting the demand in the market. So how do you bring, what can help you in that? And would the development of private placement Sukuks in the market, could that help you in some way or form? Or, would you like to talk about that a bit?
Well, Brother Ahmad, I mean, when it comes to Sukuk market, I mean, we have seen the growth of the Sukuk market in the last 2 decades in terms of the quantum, the structures, and the geographies of Sukuk issuers, right? Coming from this diverse background of issuers, right? Whether they're sovereigns, whether they're quasi-sovereigns, whether they're corporates coming from Malaysia to Indonesia to Turkey to GCC to Pakistan to Egypt now, and Alhamdulillah to even Philippines. But when it comes to private Sukuk, and especially for ILM, given our role as the probably the only supplier, the only dependable and reliable supplier of short-term sukuk in the market. And we are not only supplying the short-term sukuk on a monthly basis, which is averaging about $1 billion a month currently, but we are also supplying this high-quality, safe haven liquid assets. So for us to be able to continue supplying these high-quality liquid assets, which are rated A1, F1 currently by S&P and Fitch respectively, we need to make sure that our long-term sukuk or long-term asset, which is currently in the form of sukuk, is also accorded that highest rating. So at the moment, our minimum rating criterion is at A flat by both S&P and Fitch respectively. So for us to be able to solicit or to onboard all these long-term sukuk assets which are rated A and above, right? And you and I know, Brother Ahmad, that in the Islamic world, there are only a handful of countries which are rated A and above. There isn't any Islamic country which is rated AAA at the moment as sovereigns. There are not that many sovereigns which are rated AA and above in the Islamic world, right? We can only count 2 at the moment, right? And if you look at A flat and above, there are only 4, right? And so because there are only 4 countries in the Islamic world which are rated A and above, so that makes, our life more difficult, right? And so from our side, because of the limitations in the market, right, when it comes to the rating impediments for sovereigns or even GRAs or sovereign-linked entities or even government-linked companies rated A and above. So we need to make sure that we really, really dig deeper into finding all these highly rated credits, right, that we can actually onboard into our asset pool, right, and fund them for, say, up to $1 billion, right, without the need for them to do a roadshow, without the need for them to do a listing exercise, without the need for them to do a filing exercise, right, because everything is done so seamlessly between that particular obligor, if you like, and ILM, being the sole certificate holder, being the sole sukuk holder, right? So we will make sure that there's enough incentive for all these highly rated credits to come to ILM and issue sukuk to us so that we can fund them competitively, if not attractively. So and more often than not, Brother Ahmad, our pricing is a lot more attractive, right, than the issuers, the same obligors going out to the market to do a public deal, right? So that's one of the most important criteria as to why the obligors are now coming to ILM. Number 1 will be the pricing. Number 2 will be the ease of execution, right? And number 3, obviously the ability for us to come up with this bespoke terms and conditions for those obligors so that they can issue sukuk, get their funding to their likings as well. So that's why we are now seeing that, a lot more people coming to ILM to issue sukuk to us. And we're not only looking at a one-off obligor, right, that will come to ILM and issue sukuk for, say, 5 years, 10 years, even up to 15 years, and then forget about everything. And then 5 years later, they will come back to ILM and then decide whether they want to roll over, as in, or they want to refinance the sukuk, or they just want to pay off the sukuk. We want to make sure that we can look at a constant supply of sukuk, right, coming from that obligor. So what we've been doing is we've been pitching for what we call a private sukuk program between that obligor or those obligors and ILM, right? So alhamdulillah, I think that has been an initiative that has been bearing fruits for ILM now. So we are seeing attractions where issuers are coming, or potential obligors or issuers coming to ILM. So instead of doing a one-off, right, they are now looking at establishing programs so that they can look at ILM each and every time they need funding, they require funding. And from ILM's perspective, once we like the credit, once the credit meets all our criteria, we will onboard them from time to time, right? And because of this, our ability to ramp up on our long-term sukuk, private sukuk assets, we will be able to issue a much larger short-term sukuk to meet the demand of the Islamic banks and FIs globally.
Okay, thank you very much, Safi. This is very insightful, and we wish you the best of luck. I think ILM is indeed playing a very important role in the industry today. From you, I would like to move to Khaled. Khaled, you um, representing KFH Capital Markets. So we would like to hear about your experience. You're one of the primary dealers. In fact, you are a primary dealer for IILM HQLA Sukuks as well. So we would really like to hear your views on both the primary issuances as well as the secondary market activity that you have been able to create or see with IILM as well as generally in the market.
Yes, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. It's a pleasure being part of the panel and the IFM webinar, and I would like to congratulate Brother Ijlal and the team for their IFM Sukuk report, and for sure it's a useful contributor for the Islamic space, and it's an important source for both investors and issuers at the same time. Now, getting back on the question, Brother Ahmed, on ILM and the primary market. Now, KFH is as you mentioned, is a primary dealer on the ILM, and Brother Safri thankfully mentioned a lot of important points. But from a primary dealer's perspective, if I just shed light on a couple of points, mainly on KFH and collaboration with ILM specifically. I mean, it was there since inception back in 2013. So we have seen how ILM has evolved in these during those years. In the beginning, the short-term issuances at that time were very far apart, and they're not quite frequent. The pricing was on a prefixed pricing at that time. By 2019, it started as a more of a competitive auction and then started with monthly issuances. The first changes here made us see how at least what investors look at from pricing and how they their perspective of the market during the auction itself. So having a competitive auction always gives us a sense of the market and the liquidity and the demand in general. And this is, I think, the starting point, maybe during the future in the years, is with this structure of a competitive auction will lead to ILM being more of a benchmark to price other assets or issuances, because it ticks most of the boxes as an HQLA, and it's a source that at the end in the investor space could be used as a benchmark. And with these competitive pricing, anything on the Sukuk space could be priced in Ireland, could be used as a benchmark. So that's one point that or a change that helped positively on the from the ILM side. And then moving on the program itself, it's as Brother Safri, we reached 4.5 now on a standing basis. Is it enough? It's still not enough. I totally agree. But we are, if we look back and where we reached now, it's a good milestone that to build on, and I'm quite positive that it will even continue to grow in this regards if all the Islamic space collaborates together and provide the solutions on that space. As Brother Safri mentioned, I mean, ILM by itself is not enough for the market or sufficient enough to cover the short-term liquidity management for banks. We need other sources, we need other currencies, we need other players in the market. Now, adding to this, we have seen new investors and players in the ILM paper It was like mostly at the beginning was mostly on the financial institution side. We've been seeing asset managers being involved, which is a useful tool for them. Funds have been investing from, at least seeing as a primary dealer, we receive orders from funds, which is also a useful liquidity tool for them to manage liquidity and park excess liquidity, for instance, in the ILM paper. With the high quality and credit of ILM, so it perfectly fits the criteria. I mean, at the end, although we've seen new investors from different sectors, I still, I mean, agree with Brother Safri. It's still not enough. We still need the liquidity, short-term liquidity management solutions from various other players other than the ILM, and that's what I think the important point here in a nutshell to provide.
Sure. No, thank you. So clearly a gap between supply and demand of such instruments. Before we move on to Nadia, maybe you would like to comment a bit generally on the pricing differential that we see, and maybe we can talk about primary issuances to start with, and also do you see that kind of a gap or a difference in the secondary trading of sukuks in general? This is now not just IILM in general we're talking about. So what are your views and experiences on that front?
Yeah, I mean, if we look at it from the short-term side and the long-term, it always tends to be the same issues: the scarcity of issuances and lack of supply. The same things fall on the long-term side, which causes this gap between sukuk and bond pricing. Meaning sukuk being tighter in most cases compared to bond prices. I mean, the main reason is the concentrated sukuk that comes from certain regions, and there is no other sources which prevents even diversification on portfolios for investors. I mean, especially for investors that are only exposed to the Islamic side of the market and can't touch the conventional side. That's an issue that is faced is diversification. At the end, there are limits put and risk parameters that everybody should like stick to, and with no diversification, it will be even it will have this difficulty of getting source of other sources of sukuk and issuance in different jurisdictions. Now, we can look at it in a positive way in this case. In one case, I mean, since there is a tighter pricing and bond basis sukuk, that's a potential that we can go to different jurisdictions and issuers who are not exposed to the Islamic side and give this advantage to them, that if you're looking for new liquidity pools with tighter pricing, a sukuk is a solution. And I believe examples for that, and I'm pretty sure ABC and Miss Nadia was involved, KFH was collaborated in this, and I know she's going to shed light on it, is air lease. Air cap is one of those examples that contributes to my point I'm saying here. I mean, these tight prices, at least if we can, the supply is not there for now, we can attract more investors and leverage in this point and expand the market in this case. Now, there's another important point in the not only in the conventional side, but also on the not on the Islamic side, but also on the conventional, is the tight prices as a whole during these times. The times we're facing now is issues are on a very tight pricing level. So how long will this continue, and how long will investors cope with these tight prices? At the end, there's cost of funding, and will it continue to be in that stance? But I believe we're gonna reach a point that prices coming to that levels and staying that way or going even tighter will be a bit of an issue from an investor perspective to cope with these prices, and there should be some more of a widening in prices regarding that. And one of the main reasons which I mentioned is the concentration. So the supply, limited supply, but even if there's supply, it's from the same concentration and region. So with no diversification, that might even widen some prices moving forward.
Thank you, Khaled. And as you naturally led us towards Nadia. So Nadia, we've seen in a heavily sovereign concentrated kind of a Sukuk market last couple of years. We've seen some corporates also tapping the Sukuk market, and you have been engaged in these issuances other than the sovereign and the FIs that you have been leading. So we would really like to hear from you your experience. Was it mainly the price differential that attracted them, additional pools of liquidity? What kind of challenges that you faced during this process of bringing some of these non-traditional issuers towards the Sukuk market? We would really like to hear your experiences on that, and also if you can elaborate a bit on what kind of investors you were able to attract for these vis-a-vis both maybe air lease and AirCap that you would like to talk about.
Okay, thank you, Ahmad, very much for this introduction. Yes, I think I think when Ihsan, you were mentioning the trends. I think one key trend that we have seen in the past 2 years is obviously the emergence of non-GCC corporate players in the Sukuk market, and as you mentioned, Ahmad and Brother Khalid, the issuances by Air Lease and AirCap have really stood out, both by virtue of being sort of the first US IG corporate to tap the market and the first European IG corporate to tap the market. And actually, not to forget, another issuance that happened this year, which is quite important going forward, is the Turkey Sovereign Wealth Fund Sukuk issuance, which is actually the first public corporate Sukuk issuance from Turkey as well. So all three of these issuances have actually demonstrated the viability of the Sukuk market for sort of the non-traditional issuers as well. And I think the two key elements, the first element actually that enticed all three issuers to this market was diversity. I think AirCap and Air Lease, if you particularly take their example, are primarily large issuers in the conventional bond market. So they do issue anywhere from, let's say, $3 to $6 billion on an annual basis in the conventional bond market. But as that remains their primary source of funding, I think it was very important for them to keep exploring new investors in the fixed income space. So they have gone down the other more traditional routes, like looking at Canadian dollar or looking at something in the Asian currency markets. And I think that one of the reasons why a lot of corporates have as yet not looked at this is because there is a big difference. Sukuk is essentially being looked at historically as an EM product. And I think this is where we need to break some barriers. We have a lot of discussions amongst ourselves on Sukuk issuances, IIFM, AOFI, the bonds and loans, conferences, but all of them are concentrated in this geographical area. So we do speak a lot about Sukuk market, but we're speaking to our traditional issuer base. There's actually not been a bridge to that discussion about what Sukuk instruments represent with sort of the developed markets issuers as well. And I think that's a sort of a gap that banks like ABC, that are pure regional banks but with an international presence, and even banks like Standard Chartered and HSBC can help to bridge, because those discussions haven't been happening. So it was really as a result of us sort of, taking a step forward and having those discussions with established conventional bond issuers. And one of the main reasons they were interested was diversity of the investor base, because what they did want is that in a time period, if the US market, for whatever reason, are shut for them or too expensive for them, then they do have another source of liquidity in the fixed income space. Because unlike issuers in the GCC, issuers in the developed markets primarily rely on the bond market or the DCM market. They don't really rely on the syndicated or the club loan market that, issuers in the GCC have access to. So one was diversity, but at the end of the day, I think no one really wants to pay up for diversity, be it the issuer or be it the investor, and I'll come to that soon. So I think the only reason really that they were looking for it is because specifically in the case of Air Lease, we were able to offer a significant advantage on pricing. So Air Lease issued about 5 basis points inside the fair value of their conventional at that time. But the more interesting point to note that at that time, the differential between the GCC IG curve and the US IG curve was 30 basis points. So the GCC IG curve was priced at that point about 30 basis points tighter. So the regional investor base, which comprised about 80% of the distribution for Air Lease, got about a 25 bips pickup from a similar rated, credit, providing both, a pickup and diversity in their portfolio. So that's why we saw almost a 2.5 billion book for the Air Lease transaction, and a very successful issuance. That has obviously opened the door to a number of other issuers. But then when you come to AerCap, it provides a very interesting viewpoint. AerCap is actually, Air Lease is the second largest aircraft lessor globally. AerCap is the largest aircraft lessor globally, with almost twice the size of Air Lease and about a 2-notch rating, differential, higher rating. But when they came to market earlier this year, that differential between the US IG curve and the GCC curve had narrowed down to about 5 basis points. And that 5 basis points is again what AerCap issued at. But we didn't see the same level of engagement from the GCC or the usual Islamic investor base because they were not seeing that pickup. So, it's one thing for investors maybe to consider is that while there is a hunt for and scarcity of Sukuk assets, there is still, a lot of their decision making is still going to be driven by yield, and it is still going to be driven. So while when the GCC markets were as active this year as they have been, for them, the diversity angle didn't play as much of an impact as it did in 2023, where I think, when you have about almost, $60 billion of dollar Sukuk being issued, do they really want to invest in something that's giving them diversity and access to a global player? But then, they're not getting that pickup in yield and they're still pretty much getting the same level of return. We didn't see that same, level of engagement that we saw. So that's an interesting dynamic, I think, that, needs to be explored further. TWF, on the other hand, again, did extremely well. They were offering a 60 bips premium over the sovereign. So they still ended up pricing significantly inside their conventional curve and a significant negative NIP. And again, I mean, they were extremely happy. They placed about 70% in the GCC, opening up a completely new investor base. So a consistent theme that we are seeing is obviously the reason to bring a lot of these issuers in is the diversity. The investor base, as you were asking, it does comprise primarily of banks in the region, which again is slightly different than what conventional bond issuers see. Some asset managers are coming in with bigger tickets. One trend that we are seeing is a lot of asset managers, global players, are actually basing their funds in the GCC that are now a lot more engaged with higher volumes than they would be if they were based in London or if they were based in the US. And we're seeing more sort of, local asset managers, more insurance companies, and obviously, the private banking network coming in, though mostly on the tier 1 or on the high yield issuances. So that does comprise the GCC investor base. The US and European investor base still comprises of the large asset managers and some banks. And the Asian investor base has come back a little bit compared to where we saw it 2 years ago, where they had dipped to about 5% of the total distribution, coming back to about 10 to 15% of the distribution. But I think we do need, the sovereigns will keep issuing. But I do think that before you saw all of the sovereigns in the region come at least once a year, I think with oil prices the way that they have remained in the past couple of years, and with this drive of, bringing your ratings back on, you've seen sovereigns like Oman, Qatar, Kuwait, etc., not really come to market as often as you would have expected them to. The FIs will continue to sort of, be sort of your flow business. This year, particularly, FIs comprise a significantly large portion because a lot of them had not issued in the past 2 years as a result of the high interest rate environment. So we will see them come back, but I do feel this year has been a bit of an anomaly because there was new funding as well as sort of a lot of Sukuk that had matured in the past 2 years that had not been refinanced. They came back. So I think there is a lot of onus on all of us stakeholders to encourage more corporates, pure corporates, to come to market. And it is my fear, to be honest, that I think we already had one change where the tangibility ratios increased from 33% to 52%. That was, one change that primarily hit corporates, because sovereigns do have access to a lot more assets for structuring purposes than corporates do, right? I mean, there's just limited amount of plant and machinery, limited amount of land that they can use, and really from an operating income perspective, there's again limited assets that can be used for structuring purposes. So I think that there is a lot of onus on us to come up with innovative sukuk structures. I think, Ehsan, maybe you can elaborate on it later on, but one thing that we had done was also the Oman Tel structure, which was very new in the market, and I think can be used as well for other corporates. But I think if we look at AOFI, the new AOFI standard that's currently being discussed, and I think that would seriously hinder corporate issuances. And I think we really need to weigh sort of what the benefits of this standard are from a pure Sharia perspective versus the impact that it's going to have on corporate issuers. Because I think one thing we have been very clear when we have been discussing this with corporates, with new corporates, is that, there is the real transfer of asset is not taking place. There's a beneficial transfer. I think if I go to a European or a US based issuer and now tell them that there might be a real transfer of assets, I think we will pretty much, tell goodbye to that market. And I think that so there is a lot of strides have been done in the past couple of years in opening up the sukuk market as a very viable financing tool for a global issuer base. But I do feel that if AOFI 62 comes, then it'll be very difficult to get some of those players to engage.
Okay, thank you, Nadia. You've of course brought in a topic which everyone wants to talk about right now on Standard 62, and I can see Salman would also want to speak about it. But I mean, yes, it hasn't been issued yet, and there is still more market consultation and work going on, and we'll see where it fits in. But yes, I think that we note the point that you're making, that in its current form, if it were to come, this potentially could have an impact on the non-traditional issuers to begin with, if not others as well. Very quickly, in a minute, if you can, just because there was a question on the Q&A chat as well.
Sure.
We are running a bit late now, but very quickly, the question is that, do you expect more such issuances, and in particular aircraft leasing companies to be coming in 2025? But I think we can generalize it and say that, do we expect, based on what we have seen with air lease, aircraft, TWF, more non-traditional issuers coming up in 2025?
Yeah, Ahmad, I think we do. We do see, I think specifically from the aircraft leasing space, there's been a lot of engagement. I think really it needs to now be investor driven. Is there some kind of saturation of such issuers in the market? I do think that we need, while the aircraft leasing sector lends itself well to sukuk issuances simply because of the high availability of unencumbered assets in the form of aircraft. But I do think that we need to see more industries coming in. And I think the top sort of few that come to mind are are obviously oil and gas, telecom, petrochemical. So I do think that we need to see more. There is engagement. But like I said, I think the onus is really more on banks like us to bridge that gap and have those conversations, because it is not easy to explain sukuk, and it's not just the onus of one bank to do it. I think all of us collectively as an industry need to push. But yes, we do, and I think we need to be. There are other jurisdictions, and I think one last point is one unexplored jurisdiction that can really set this market going is actually Asian corporate issuers. So while the local currency Asian market is extremely active, I think primarily because of certain constraints on regulations and structures, we've not seen some of the large GREs from Indonesia, from Malaysia, from Philippines, access this market, and I think that's what could really boost the market dynamic and boost corporate issuances, and also lend more credibility when we do go to companies in Europe and in the US. To talk about viability of sukuk issuances for large GREs and corporates.
Oh, okay. Thank you. Thanks, Nadia. We'll quickly move towards Salman now. Salman and Sabri have, of course, been waiting. So Salman, for you, I go back to the beginning of the session when there were discussions about, there was some talk about innovative structures, innovations, and structures which away from the usual ijara, etc. Structures. You have been involved in this year and I think previous in issuances which are related to fractional as well as convertible sukuks. So would you like to just shed a bit of light on that as to what were the challenges around it, and do you see more such issuances getting popular as we move ahead into 2025 and beyond?
Assalamu alaikum. Firstly, thank you to IIFM, for giving me the opportunity. It's always great to be here, and as is always the case, the lawyers usually follow, basically the good and the great to talk about unpopular things. But in terms of market innovation, I think I would say the large segment of the market, where there has been true innovation has been the blockchain and use of smart contracts. And before people like me get lost into all the terminology, that effectively or in summary, what all that means is that technology has enabled predominantly retail investors to have access to basically fractional shares, which means that their denomination is effectively divided into small denominations to allow the sukuk to be broken into small units, which can then be subscribed by individual investors, without, the need for significant capital and effectively, to a certain extent, democratizing, basically the market and the investor pool. So that is obviously one element, and you would have seen that ADEB, has used this technology quite successfully. More recently, Bank ABC through its ILA Bank has also developed a platform, which effectively allows its customers to invest in different government of borrowing securities. And obviously, so I would say, the large, I would say, innovation has actually occurred in this particular segment in terms of the smart contract, which means, there are automated contracts, with terms which are written into the code. So I would say that, that is something, which is, I would say, much more suitable for non-financial institution or sophisticated investors, because I think it will be difficult to replicate this technology or these concepts for financial institutions or for sophisticated institutional investors. For reasons which I think most of the people who are on this forum will be aware of, predominantly regulatory considerations, because, a majority of the sophisticated and, I would say, up and coming jurisdictions, require minimum wholesale denominations. So you don't want that segment of the market to be, to be overshadowed by this. And also, logistically, and obviously some logistical issues. How easy is this to be deployed in the primary market? Where you are, where you have, basically where you have, where you have investors globally. So I would say, those are some of the things, which are relevant, but, the sample size is too small at the moment. We would need to see, maybe, 10 or 15 of these, to actually have a proper sort of precedent base, and then we can discuss, with some of these issues in a much more sensible way, I guess, and try and find some solutions to the issues that are, that can be utilized in the primary market. The second segment is the convertible issuances, and I think people would have seen that, predominantly in the domestic market rather than in the benchmark or the international markets, there have been a number of convertible issuances. And a large number of them have occurred in Oman for the very first time. Bank Nizwa set up its mandatorily convertible Sukuk program. Another financial institution is also I think it's public knowledge. I think Aliz is coming with a convertible Sukuk, which is not mandatorily convertible. So I think there are 4 or 5 other issuers who are coming up with convertible issuances, and I think the reasons for a number of these players are quite different. Some of them want to give their shareholders an upside in case basically there is an IPO, and some are ripe for an acquisition. So there are convertible elements built into this, which effectively provide an upside to their to the investor base, and I think that is built into the pricing. So I think that's quite a unique development, particularly in a jurisdiction like Oman, where generally the regulators are quite conservative in this context, and like I said, there are a number of at least 4 or 5 new issuances that we are aware of, where this will be taken to a different scale, including some GREs who are considering issuing convertible issuances. So I guess the main issue with the convertible issuances so far has obviously been regulatory considerations, because you obviously need shareholder consent. The regulators are especially in the context of financial institutions are quite careful in providing their approval, particularly if a possible conversion can lead to a controller issue, where a particular investor can hold more than 10%. So obviously like the blockchain or the smart contract, I would say regulatory concerns are the ones which remain a key factor, plus the internal and external corporate governance issues and corporate authorization issues which play into these deals. That's why if you would have seen the Bank Nizwa and the Al-Sukuk, their issuance time frame has been considerably long, and the cost of issuing them has also been in comparison with other I would say asset-based Sukuk has been considerably high. So I would say regulatory challenges, costs, time efficiency, and these sort of challenges remain. But I'm hopeful that IIFM, through its amazing work that they have been doing, will be able to come up, with some standards, hopefully in the fullness of time, which can help, which can help standardize this market as well.
Thank you, Salman. Yeah, that's very insightful, and completely agree that there are challenges, particularly on the convertible side. But as the IPO markets and as the equity markets, I guess, grow in the region, there probably will be more demand for such issuances as well. Well, thank you for your thoughts on this subject. We'll now move to our panelist, Brother Sabri from Turkey. And first of all, congratulations on the successful issuance that the sovereign had just a few days back. Again, a repeat issuer, Turkey sovereign, and an issuer that is looked at with a lot of interest by the market. Turkey has a lot of, from an investor point of view, investors have always had an interest in Turkey as a sovereign, the institutional issuers as well. So, Brother Sabri, maybe you can bring to us the Turkish perspective on the Sukuk markets, the trends that you have been seeing in Turkey, and how do you expect the Islamic capital markets, in particular Sukuk markets, to go further in 2025 and beyond in Turkey?
Thank you, Brother Ahmad Hassan. I am honored to be part of this panel with distinguished experts. I also would like to thank Brother Ijlal Ahmed and his colleagues for inviting me to the event and their tremendous effort on Sukuk report, plus the documentation that they are doing excellent job. As a Waqf participation bank, as most of the panelists and distinguished guests know, that we don't call ourselves Islamic, so we call participation banks. So we also part of the IIFM member. Before moving on to the capital market or maybe the Sukuk market in Turkey, let me set the stage sharing some operating environment challenges we have, and that will lead to domestic and international Sukuk issuances. First of all, you may be aware of the high inflation in Turkey, and the central bank is projecting 44% by end of this year, and next year and year after a massive deduction, hopefully, and 2026 will be, inshallah, a single digit. We are living in a 50% policy rate environment with a restricted credit growth, both on the Turkish lira and the foreign currency credit side, or the loan side, in other words, and also in an environment that we have to deal with, especially on the liability side, 60% Turkish lira and 40% foreign currency. So if we don't meet those requirements, obviously there is a hefty penalties. And most importantly is, the mismatch of the balance sheet of most of the participation banks in Turkey, because the assets are fixed rate, medium and long term, and the liabilities are unfortunately short term and floating rate. So while we are dealing in this environment, as Brother Ahmad mentioned, we have seen a very successful international issuances this month and the last month. Also, the panelists mentioned about the Istanbul Financial Center guaranteed by the Turkey Sovereign Wealth Fund. We have seen the 2.5 billion successful transaction by the sovereign. And we believe that there will be more issuances coming into the market in 2025. But let me divide into two, domestic issuances and international. In the domestic market, we are living in a very high interest rate environment, policy rate environment. Therefore, the credit appetite or the borrowing appetite is very limited compared to 2021, 23, 24. If the interest rate started moving down, we will see a tremendous domestic issuances. Domestic issuances are divided into two as well. One of them purely for liquidity management purposes. We, as participation banks, are issuing Sukuk. Those are mainly very short term. Maximum I have seen so far is 1 year, but the majority is 3 months, 6 month tenor. And the other one is the corporates are issuing a Turkish lira denominated Sukuk. These are all in Turkish lira. So we are not allowed to issue a foreign currency denominated Sukuk within the country, but we can issue outside. So that is really a domestic market. Also, we have seen the sovereign, especially for us, for the banks and the asset management companies, they issue 1 year, 2 years foreign currency denominated Sukuk purely for us, not international investors. Though, those are mainly dollar, euro, and gold, physical gold issuances. On the international side, Islamic banks and the corporates are tapping into the market, especially the FIs, corporate. We have not touched the market this year. If you look at the most of the Islamic bank in 2024 in Turkey, because of the 2% credit growth restriction. So therefore, we usually borrowing from international market on a bilateral basis, or a club deal or syndications. Especially the Islamic bank and the conventional bank are tapping into bilateral and syndications. Conventional syndication and Islamic or the participation banks tap into the market by bilateral transactions. So, as I said earlier, if we see the interest rate is moving down on the Turkish lira market, we will have a tremendous, growth opportunity for us, because at the moment the participation banks only takes, unfortunately, not even a double-digit market share from the banking sector. It is around 9%, and we have the intention as an industry to reach to 15% by 2026, whenever it's possible. And therefore, we have seen 2 digital bank and 1 newly established participation bank coming into the market, brought the number of participants in the market to 9. Out of 9, 3 of them are state-owned participation banks. And we have, when we are doing the 2025 budgeting, we have put it into our budget for maybe 30-40% increase on the domestic Sukuk issuances. On the international, again, dependent on the regulatory restriction, if that is lifted, I believe that international market will see a good number of Sukuk issuances from Islamic institutions, and corporate will be tapping into the market as long as they can sell their stories. We have seen the sovereign wealth fund. I'm sure there will be many more coming into the market to tap the international investors. I think I stop here if any question comes in, and I'm happy to answer it.
Brother Sabri, thank you very much for giving us insights into the Turkish Sukuk, Islamic and the Sukuk markets. We definitely, I think, including us, a lot of people look at Turkey with a lot of interest. And yes, you're right, whilst the participation banking share is 9%, but these are all very meaningful institutions, and there's a lot of good work that we see going on. And we do hope that the inflation numbers come down in Turkey, and both the domestic and the international markets grow further. With such a strong manufacturing base and population that you have, there is definitely room for a lot of growth on the Islamic capital markets. Well, I would, unfortunately, we have run short of time. So I would really like to thank all the panelists for very useful contributions. I don't think we will be able to take any questions and answers, but if there are any questions, they can be shared, please, with the IIFM admin, and we will refer them to the panelists, and we will come back to those who have asked those questions. Thank you very much. I think this was an interesting session, and I think we can conclude that the trends that we have seen in the last few years, some of them trends to continue in the Sukuk markets space. As Hassan pointed out, the sovereigns and the quasi-sovereigns will continue to tap the market because of the capital requirements that are there, various 2030, 2020, 2040 plans, etc. by the sovereigns. We do see in pockets innovation. We do see some new structures coming in, the ones that Salman mentioned, those Nadia mentioned. And we also, there is definitely a lot more that can happen on the liquidity management side, which Brother Safri was talking about. So the industry remains the issue of supply being following the demand is there. So there is definitely a lot of room for growth. We haven't been able to touch upon some of the challenges that the industry faces today, but hopefully in another session we will be able to talk a bit more in detail about those. Thank you very much to all the panelists and to IIFM. Thank you. Assalam.
Thank you.
Thank you very much.
Thank you very much.
Thank you.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you. Thank you.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Honorable Brother Ahmad Hassan, Managing Director and Chief Executive Officer, Bank ABC Islamic Bahrain, and for the excellent chairing of the session. And thanks also and appreciation to our distinguished panelists as well. It is indeed, it is a very useful session, alhamdulillah. But allow me just to add on what Honorable Brother Ahmad said. Indeed, IFM's role in contribution to the development of this industry is something well known and visible, and to continue its efforts as non-profit organization, strong support is needed from market participants by joining its membership, and this will undoubtedly strengthen its position to exert more efforts. So let alone the huge benefits that the membership brings to the institutions, such as cost reduction, shortening the time of negotiations, ready-to-use comprehensive agreement, and many benefits. So we look forward, inshallah, for the industry support and participation in the IIFM tireless effort. What did you do? Nothing. Can you hear me? Let's move now to the special presentation. Very interesting one, unlocking the potential of assets, tokenization in Islamic finance, RAMZ, the next phase of Islamic capital market instruments. So allow me to invite Brother Jafar Rayhan, Head of Islamic Business Development, Labuan Financial Services Authority, FAC. Over to you, Brother Jafar.
Thank you, brother. Bismillahirrahmanirrahim. Your Excellencies, esteemed guests, ladies and gentlemen, Assalamualaikum warahmatullahi ta'ala wabarakatuh. Can you guys hear me?
Yes.
Thank you. Shukran. All right. First of all, I would like to thank you, IFM, for having me here to share a little bit about our latest products, the innovation from Labuan IBFC. But before I proceed on RAMZ, let me talk a little bit on the bigger agenda in Labuan IBFC, which we call IDEC, which stands for Islamic Digital Asset Center. Now, taking into account the rapid technology innovation, Labuan IBFC has rolled out the IDEC initiative in 2022, and this was aimed at creating a new business opportunities for the global communities, especially for the global Muslim communities, through the adoption of digital solutions in their international Islamic financial offerings. IDEC offers a suitable platform for Sharia-compliant digital solutions to further complement the center's robust regulatory ecosystem that facilitates and confers greater diversity regarding Sharia-based solutions. Now, in IDEC, or Islamic Digital Asset Center, there are three main pillars. The first pillar is the Islamic Digital Capital Market. The second pillar is Islamic Digital Financial Market, and the third pillar is Islamic Digital Social Finance. Now, all these three pillars are interconnected, all right? But that will be another session. I cannot talk all that in here, but we will be talking on the first pillar, which is the Islamic Digital Capital Market. And the initiatives in the Islamic Digital Capital Market is RAMZ, okay? So the RAMZ basically is, the word RAMZ actually derived from an Arabic term, which means token, right? And RAMZ has the characteristics of securities as defined under Part 1, Section 2 of Labuan Islamic Financial Services and Securities Act 2010, or LIFSA in short, and it complies with Sharia principles. Now, if you can look at the slides, All right, these are the features of RAMZ in tradition that is actually differs from the traditional securities like sukuks. All right, first it is a Sharia compliant token, and it tends to achieve the same benefit benefit offerings as being achieved by sukuk in the Islamic capital market. Therefore, we have sukuk in Islamic capital market, and therefore we have RAMZ in Islamic digital capital market. The modus operandi of RAMZ, basically it is similar to the traditional securities offering, except that the RAMZ is issued and listed and traded in a digital platform. Okay, it's actually a digital format and recorded on the distributed digital ledger, which is cryptographically secured, and investors have rights which are represented in the form of digital smart contract. All right. So again, before RAMZ is being issued, Sharia requirement is needed. Sharia, pronouncement is needed. Okay, so Alhamdulillah, right now we have in Labuan, IBFC, 4 digital exchanges, and all of them are able to offer or list token RAMZ. So if you go to the next slide. All right. So in terms of fundraising through RAMZ, okay, it is you can see in that slide, okay, the issuer and the investor, just like normal securities, right? So the issuer can be anyone. It can be the government, it can be private entities, okay, it can be anyone. It can be, for example, digital banks, captives digital, and through the intermediation of the exchange and through blockchain and smart contracts, it opens the availability for investors, right? Investors can be government, GLCs, private sectors, digital, digital banks, and high net worth individuals. As what Dr. Sami just now mentioned from IDB, that GDP Sukuk. So we can also issue a GDP RAMZ. And the benefit of RAMZ is that apart from being able to be fractionalized, it has no ratings. Therefore, countries, especially Muslim countries, can basically leverage on RAMZ to raise funds apart from the normal sukuk. All right. So the tokenization basically allows mass participation, as I mentioned, mass participation of investment via its fractional ownership and low cost fees of investment. Sukuk, you have to pay a huge amount, you know, for investment banks to raise and whatnot. But through RAMZ, the cost fee is very minimal. Second, it enables existing assets such as sukuk to be tokenized and allowing retail participation in the sukuk market. Third, it enables full proof of ownership for investors on the underlying assets, while the Labuan exchanges provide the corresponding liquidity via trading in the RAMZ. So as the exchanges are under Labuan FSA's regulatory purview, investors are assured of RAMZ credibility and authenticity. So in terms of the Sharia requirement, of course, the core business activities of RAMZ must be Sharia compliant. Secondly, the underlying asset backed by the RAMZ must be valuable and permissible from Sharia point of view and in existence at the time of tokenization. The assets must also be identifiable with regard to their essences, quantities, and values. Additionally, the assets must be owned and in possession of the RAMZ issuer. Third, other Sharia principles and operational requirements are set by the appointed Sharia advisor to the Labuan Digital Exchange from time to time. Alhamdulillah, right now we have about 46 Sharia listed with us, Sharia advisors who are listed with us, who are ready to offer their Sharia advisors on this asset class. All right. Now, if you go to the next slide, currently we already have 5 RAMZ listed. And as what mentioned by my Director General, Mr. Nick, the value has fetched, Alhamdulillah, $1 billion. But we are going beyond that. We want to go beyond that. We know for the fact that by 2030, the value of halal industry fetch $10 trillion. This is the market that we should be focusing on as together as industry. You know, how we can work together to achieve that that target, right? So the $10 trillion, that is a very huge market. Now, as you can see, this the existing token, right? Is very, very unique. as you can see, the first one, the TS1, that is actually a code denote the RAMZ. It is a digitalization and tokenization of refined Chinese ceramics. This ceramics is listed and put in Hong Kong Museum. All right, it is issued during Ming Dynasty. It was made during Ming Dynasty. So basically, it allows illiquid asset to become liquid. Right, and the second one, I think Brother Safri will be able to attest this. IIFM Sukuk, okay, Alhamdulillah. This is the world's first issuance of an institutional issued tokenized Sukuk. All right, it is been done by one of our exchange. It is continually being done together with IIFM. The third one is the battery issued for electric vehicles. This is a company in China. All right, we tokenize the shares. And the fourth one is a company that basically mining gold, and we tokenize again the shares. And this is one of the biggest listed in our exchange. And the upcoming one, the next one will be again gems, all right, a security token, sapphire gemstone, and this will be tokenized using the technology or the blockchain. So, but what we want right now is to move forward, inshallah, in next year. All right, we want to do under IDEC, Islamic Digital Asset Center Phase 3. That we want to go to connect the global Muslim communities closely via digital investment and trade. All right. So RAMZ, we hope, can be extended to sovereign nations to raise funds, either through tokenization of their national assets or sovereign sukuks, or even for that matter, their GDP, as mentioned by Dr. Sami just now. All right. So in addition, we also have a new feature of player, which we call Ummah Link companies, all right, which will be established in Labuan, IBFC. And these are the parties or companies, the Ummah Link companies will be investing and also issuing RAMZ. As the name suggested, Ummah Link companies, the purpose setup of Ummah Link company is to serve the Ummah in various capacities. For example, for saving pensions, for basically savings for, what do you call it? There's an echo here, I'm sorry. Hang on. Hajj, all right? Payment of zakat and waqf, these are the Islamic social finances that we can want to achieve through the Ummah Link company. All right. So the next slide, in support of the IDEC initiatives, Alhamdulillah, the Malaysian government through the budget has granted a zero tax from 2024 until 2028. All right, on all these activities. All right, Labuan banks, investment banks, Islamic. All right, but all of them must be digital. All right, must be digital. And the latest one, 2025, we include takaful. So this is actually another initiative. Again, this is the second pillar, which is the Islamic digital financial market that we're developing. So once we develop the Islamic digital capital market, we're going to develop the Islamic digital financial market, which consists of the Islamic digital bank, Islamic digital takaful, which we call it as takaful tech, and Islamic digital wealth management. And all that will support the Islamic digital social finance, because through digitalization, tokenization, we can airdrop, we can sedekah, digitally sedekah some of these RAMZ to the have-not, so that they can also participate in the real economy. They can also participate in investing into RAMZ, which cannot be achieved right now via Sukuk. All right. So I think I'll stop here. If there's any question, I'm happy to take. Thank you very much. Assalamu alaikum.
Any question from the participants? Because this is very interesting, mashallah. Topic, Brother Jafar.
Yes.
We need to learn more about it, mashallah.
Inshallah. But we hope together to work with IIFM. Sorry to be blunt here. We hope to work with IIFM to basically work on the standards on the Islamic digital assets. This is something that we aspire. We hope that IIFM can extend the scope of digital assets, inshallah.
This is very interesting suggestion. Inshallah, the Honorable CEO will look into this. And
Alhamdulillah.
Thank you, brother. Inshallah.
Thank you, brother. Thank you.
Okay, now for the time constraint, inshallah, we will go to the next session, the third session, inshallah, special presentation on Islamic finance, what we call cash Waqf Sukuk from Indonesia. Is a very unique structure, inshallah. So I will invite the Honorable Dr. Dada, inshallah, Chief Executive Director, Islamic Economics and Finance, department Bank Indonesia to, mashallah, let us get into this, inshallah. Silakan.
Assalamualaikum warahmatullahi wabarakatuh. Thank you so much, Brother Ahmad Rufai. Actually, I'm representing Dr. Dadang due to some other commitments. So please allow me to represent Dr. Dadang and present our thought and our ideas on what do we call cash out Catholic Sukuk. First of all, Assalamualaikum warahmatullahi wabarakatuh. Honorable ladies and gentlemen, brothers and sisters. Thank you so much, first of all, for having Bank Indonesia, and presenting our product. If I may say that, in fact, it is actually not Bank Indonesia product, but this is the Indonesian product, because it is a combination of the authorities to construct and to run this product, which are Bank Indonesia, Minister of Finance, Minister of Religious Affairs, and National Waqf Body. Please, can you start my presentation? So the presentation is titling Cash Out Link Sukuk. Next, please. This is actually a program. The actual Sukuk instrument will be, I will present it later. I mean, I will tell you later. Sukuk Awqaf 001, Sukuk Retail Sukuk Awqaf 001 until 007. But the Cash Awqaf Link Sukuk is the program of Cash Awqaf. First of all, Indonesia has blessed, alhamdulillah, with very potential and social finance. First of all, we are among the most generous country. We are 5 times indexed in the World Giving Index, ranked #1, and country having maybe the most generous people. Yeah, people in Indonesia tends to donate the social fund for social project. And then we are also blessed with largest Muslim population in the world. 87% of the population are Muslims, nearly 230 million people. And then the middle class is about 74 million people. And most of them are, of course, they are having, of course, extra income or extra money to be donated for social purposes. And then in terms of Awqaf land, alhamdulillah, there are 435,000 locations of Awqaf land. Some of them are certified and others are not certified yet. But in terms of the amount or the value of Awqaf, we can note that we have around 180 trillion rupiah per year. But unfortunately, among those Awqaf potential, most of them, especially if we talk about physical Awqaf, most of them are utilized for mosque or masjid, 43% or nearly 44%. And another usage would be for prayer room or musola or surau. Usually in Indonesia or Malaysia, we call it surau, a small kind of masjid to pray. And then the rest are not being utilized yet. And then what are challenges and when we utilize social fund or social asset? First of all, of course, low literacy. Mainly people understand Awqaf for mosque or for masjid, for madrasah, for school, public school or something like that, but not for like more productive kind of asset. And then secondly, underutilized asset. Thirdly, governance of Nadir or the Awqaf manager. So we need to have national movement toward cash Awqaf and productive Awqaf. Next, please. And next. Okay. So what is cash Awqaf Link Sukuk? As I mentioned in the beginning, CWLS is the instrument combining 3 sectors: Islamic capital market or Sukuk, Islamic social sector or Awqaf, and government sector or fiscal. CWLS is an innovative Islamic securities functioning commercially and socially. So the main purpose of CWLS would be to facilitate social investors, waqif, who want to invest in Islamic and investment-grade portfolio, meaning Sukuk, while contributing to the national economic development agenda or social project. Further, it can also facilitate cross-border investment. So we are welcome for any cross-border or international investors. What are some benefits that we offer under this instrument or this program? First of all, CWLS integrates both Islamic commercial and social sector together, while Sukuk usually connects or connotes with the commercial purposes only. So when we talk about sukuk, it can also function as social instrument instead of commercial purposes only. And then CWLS is an Islamic investment scheme contributing to the national economic development or social project and varying the Islamic financial market instrument. Because before the issuance of CWLS instrument or sukuk, we do have some commercial sukuk, government and corporate, including Islamic bank sukuk. But when we issue this sukuk or this program, we are now having a social purposes sukuk. Thirdly, one of the most effective ways for the government to assist the social investors, because as I said and as we presented in the beginning, there are many younger generation or donators, Islamic donators, investors, or Waqif who wants to donate their fund or their liquidity, their money under Awqaf concept or Awqaf scheme. And then we are using government securities or sukuk to ensure the trust from the public and to ensure that the sukuk will be safe and will be used for government or national project. Currently, what we have done with Cash Awqaf Link Sukuk, we have utilized the sukuk fund for health, for education, for religious activity, project, and then for other purposes or other projects, mainly agriculture. Next, please. So this is the model of Cash Awqaf Link Sukuk. If you can start from the row number 1. So there are at least 2 Waqif, the temporary cash Waqif, and then the perpetual cash Waqif. So both of these Waqif may donate, may put their fund or liquidity or Waqaf fund to the Nadir partner. So there are 2 Nadir partners. Those deals with Islamic banks. So Islamic bank can function as collector of Waqaf, and the non-banks can be functioning as Waqaf collector as well. So Waqaf collectors can come from Islamic bank or non-Islamic banks. And then these 2 Nadirs will pull the fund together and then they'll put it in Nadir. Nadir in Indonesia is Badan Waqaf Indonesia or National Awqaf Body. So they're the regulator, also the operator of Waqaf in Indonesia. And under the MOU, of course. And then between Nadir, which is BWI or Badan Waqaf Indonesia or National Awqaf Body, they have had an agreement with Minister of Finance to purchase the government sukuk, which is under Waqaf. As I mentioned, the Waqaf sukuk issued by Minister of Finance would be Sukuk Waqaf 001 until 007 and Sukuk Waqaf Retail, I think 001 until 005, the issuances. So they have had an agreement, an MOU with the Minister of Finance to pledge to put their Waqaf fund, cash Awqaf, under Sukuk Waqaf issued by the Minister of Finance. And it is placed under private placement. So there's no auction for this, because how come we do auction for Awqaf? You just put it under private placement. And then the project is determined by the Minister of Finance after the coordination with BWI or National Waqaf Body, the authority for Waqaf in Indonesia. So again, when the money or Awqaf fund is used by the Minister of Finance, they will use it for, of course, national project, for example, for health, for education, and for other social purposes project. And then the Minister of Finance gives a coupon for cash Awqaf sukuk holder. But of course, it is not a commercial coupon, but it is like appreciation, like a thankfulness from the government to the Waqif or to the Waqaf donators, yeah, because they have helped. They have helped the nation, the country, to do some social project. And then the Nadir will have a commitment with the Nadir, the individual Nadir or individual Waqif, yeah, to use a coupon for another Nazir partner project. Yeah. So here in the first case, we have used the coupon coming from Cash Awqaf Link Sukuk to have a free services for eye hospital, special eye center or hospital of Ahmad Wardi in Indonesia. There has been like more than 1,000 patients to be free when they have a problem with the eye and they come to Ahmad Wardi Hospital and they are recovered from from the eye disease or eye problem. And then what are the role of Bank Indonesia, Ministry of Finance, Ministry of Religious Affairs, and other party or regulators? We are maintaining the transparency of the government, including the usage of Waqf fund. And then we have also Waqf core principle issued by Islamic Development Bank. We apply this under this concept, and we provide system. And we also partnering with social institution, Nadir and Laz, Lembaga Amil Zakat, the Zakat institution, and to manage social project. And we do some public education regarding Sukuk Awqaf. Next, please. So this is the soft launching when we firstly announced the project. So firstly, it was announced when we had World Bank and IMF annual meeting in Bali. Yeah, we used this moment to announce to the world that we have had Cash Awqaf Link Sukuk project. And there was a signing of the MOU between 4 authorities, Bank Indonesia, Ministry of Finance, Ministry of Religious Affairs, and again, National Awqaf Body as the authority for Awqaf in Indonesia. So there is a mutual agreement. We commit for the authorities to take part in this project, and then redefine the tasks, assignment, responsibilities of each counterparties, and serve as a foundation for the continuity of the program. Specifically for Bank Indonesia, we commit to provide payment system. And for any government sukuk, Bank Indonesia is the only sukuk custom, or those who manage government of Indonesia sukuk for the settlement, for the custodian, for any related activities with regard to government sukuk. That's Bank Indonesia role. And on supervision of Cash Awqaf core principle and monitoring CWLS governance and economic impact. Next, please. So instead of CWLS, there is also Government of Indonesia Green Sukuk. If we compare these two sukuk, there's some similarities. Even there are also some uniqueness of these two sukuk. For example, in terms of the framework, the Green Sukuk issued by Government of Indonesia, it is mainly for SDG, of course, while CWLS is for Waqaf framework. The investors for Green Sukuk, it will be, of course, Muslim investor or any investor. Non-Muslim can be the investor for Green Sukuk, while for CWLS, it's Nazir. Nazir is the one who can invest Cash Awqaf, in this case, Awqaf Link Sukuk project. And then the proceed will be used for green project, while for Cash Awqaf for social project, the management is under budget system, climate budget tagging, while for Cash Awqaf will be for Waqaf governance system under BWI, Badan Waqaf Indonesia. The project for line ministries, while for Cash Awqaf under Nadir, the investor, I've mentioned it. And then the project will be for the short term mainly, while for Cash Awqaf, of course, there is a temporary or perpetual project. And then for Green Sukuk, it's for environmental benefit, while for Cash Awqaf for the Maqasid Sharia or socio-economic development. Reporting, we report these two sukuk, and of course, Sharia compliance, and the challenge will be the trust or greenwashing under Green Sukuk, and for Cash Awqaf will be the trust or impact washing, related with the investor and managing of the Waqaf fund. And then issuance method, book building, auction, retail, while the Cash Awqaf is private placement, as I mentioned before. Next, please. Okay, as I mentioned, there is a Sharia compliance evidence. We have had Sharia compliance issuance from National Sharia Board. So they have issued fatwa or opinion of Sharia, or that's what we call it, to guarantee, to ensure that this Cash Awqaf Link Sukuk is complied with Sharia principle and value. And Alhamdulillah, to 2023, we have had ISDBi prize. It is selected as the first place winner of the prestigious Islamic Development Bank Prize for Impactful Achievement in Islamic Economic for the year 2023. Next, please. I think, this is the issuance of CWLS. It has been issued since 2020 until now, 2024. In terms of Sukuk Waqaf, We have issued 7 series, from Sukuk Awqaf 001 until 007, while for Sukuk Waqaf Retail, it has been issued 5 times, 5 series from 1 into 5. What are the differences between these two Sukuk? Both of them are Waqaf Sukuk, both of them are government Sukuk, but the main difference would be for Sukuk Waqaf, the investors are institution, while for retail, anybody, any individual, Muslim or non-Muslim who want to donate Awqaf, they are free. They can participate in retail cash Awqaf Sukuk. It has been 1.1 trillion rupiah collecting of the cash Awqaf, or nearly 74 million US dollar. Still very small, but at least we start. And then we want to show that Sukuk can be available for social purposes as well instead of commercial. Next, please. I think this is the last slide. Okay. The moving forward and challenges. Of course, literacy, as I mentioned in the beginning, very rare, or at least not all of the people in Indonesia are aware of this cash Awqaf link Sukuk, even the institution as well. At least based on my experience when I promoted this Sukuk to a multinational company, even instead of commenting what is the cash Awqaf link Sukuk, they told me, what is Awqaf? I don't know about Awqaf. I thought Waqaf was only for masjid. No, I said, Waqaf can also be used for cash Awqaf and for national project. That is the main challenges in Indonesia when we try to market, when we try to promote this cash Awqaf link Sukuk. And then transparency and accountability. We have applied cash Awqaf, Waqaf core principle, Waqaf core principle issued by ISDBi and adopted by Badan Waqaf Indonesia, national Waqaf body. And the government of Indonesia is very transparent in terms of informing the returns, utilizing of the fund, and of course, the project being done under this cash Awqaf. Social impact, there is a report, there is a social program, and then reporting as well. We reported this cash Awqaf together with other government Sukuk. And how to optimize and distribute, including the marketing strategy. Of course, we try to expand the investor base, and then we distribute partner-based expansion and Nazir as well. I think those are all of my presentation. Thank you so much.
MashaAllah, tabarakallah. Ya brother Tuan Haji Rifki, lama tak nampak, tak jumpa,
tak jumpa.
Still you look muda,
Jumpa online.
So thank you very much. Really good to see you again, my brother.
Thank you.
And very interesting structure, of course. You know, we need to learn more about it. And for those who don't know, maybe we have some people who don't know what is Waqf is about. Waqf is, of course, an Arabic term, as he said, and it means endowment of a property to be held in trusts and used for charity or religious objective, isn't it? So this is the Waqf. Waqf, inshallah.
And it has IFM promised us to use this as a standard. One of its standard later on,
inshallah. Take this with to Honorable CEO, inshallah. And then also it has many types, right? We have Mushtarak, and then we have Waqf Khas, and then we have Waqf Mu'abbad, means, perpetual Waqf, which you talk about, and then we have the temporary Waqf, inshallah. But I think the Indonesian one, contains both, right? Mu'aqqad means temporary one, and the perpetual one, right? Okay,
exactly.
Inshallah, very good. And it is Waqf Mushtarak also, right? Joint Waqf.
Yes,
exactly. It's not just single Waqf, mashallah. It's very interesting. Any question from the panelists? I really have personal interest on this, really want to learn more about it. Good innovation, really. Any question from the panelists on this? From the participants on this?
If not, there is a request for me to share the presentation. I think you have had my presentation done, so you can share with the audience, please.
Okay, with that, thank you very much, Tuan Haji Dr. Rifki. Mashallah, nice to meet you. Inshallah, we'll talk, inshallah. So now, even though we are, behind, the schedule, but alhamdulillah, it's beneficial. Alhamdulillah. So now we move to session 4. Also, another very interesting topic with a very, very special brother, Mustafa Adil, mashallah, who always I really want to listen from him because he has a lot of information. Alhamdulillah. So, environmental, social, and governance ESG consideration and Sukuk market development. So, over to you, brother Adil. Mustafa.
Thank you so much, Dr. Ahmed. Bismillahir Rahmanir Rahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'een. Thank you so much for the kind introduction and the kind words. It's always a pleasure to be a part of any initiative that IIFM organizes. And would like to start by congratulating IIFM on the launch of this very, very strategic report for the Islamic capital markets covering Sukuk. And we always look forward to this report as an annual benchmark and guideline for the industry to help guide us onto the latest developments and trends that are taking place. And I'm also grateful for IFM to organize this particular event and for this session that tackles what I think is one of the most important emerging trends within the Sukuk space, which is the emergence of sustainability and ESG considerations. When we consider the growth of the Sukuk market, it's been tremendous growth over the last decade, double digits, between 10 to 15% depending on the year. But when we look at the green Sukuk or the ESG or sustainability linked Sukuk component, the growth has been much faster. Although it started from a smaller base, if you look at just the last 5 years, issuances have grown to about, we're projecting about $15 to $16 billion in issuances this year. And that is a growth rate of about 70% year on year over the last 5 years. So it's been a tremendous growth, but with it, there's a number of challenges. There are challenges regarding disclosures, regarding frameworks. There are challenges around greenwashing that have emerged and various others. And, I am delighted to have with me a panel of esteemed experts who we will be hearing from, who will share their expertise and their insights to give us a greater perspective on the session. And I would like to start by quickly introducing the different speakers that we have. And at the same time, I would request them all to turn on their cameras and then we can start the session. We have Dr. Zamir Iqbal, who is Vice President for Finance and the Chief Financial Officer for the Islamic Development Bank. We have Sister Fatma Zarrar, who is the Deputy Secretary General for the Participation Banks Association of Turkey. We have Ms. Talat Hussain, who is a partner covering ESG and sustainability at Reed Smith LLP. We have Ms. Luma Sqaf, who is a director for Middle East, Africa, and India for the UN Principles for Responsible Investing, the UNPRI. We have Mr. Ahsan Hussain, who is Global Head of Investments at Ahli United Bank in Bahrain. And we have Lawrence Oliver, who's a Director and Deputy CEO at DDCAP in London. Ladies and gentlemen, thank you very much for being with us today. I think as Dr. Ahmed mentioned, time is short. We have run over, so I will move straight into the discussions. And I think, I want to start the conversation with Dr. Zamir, if I may. And Dr. Zamir, the emergence of ESG considerations within the Islamic finance industry broadly and within Sukuk specifically has been a theme that we have seen develop over the last few years. From your perspective, from the Islamic Development Bank's perspective, how significant are ESG considerations for the industry? How has Islamic Development Bank worked to incorporate these considerations into your activities? And how do you see that going forward?
Thank you so much. Bismillah ar-Rahman ar-Rahim. It's indeed my pleasure to be on the panel, and I thankful to IFM for the invitation. So, Brother Mustafa, I think your question is very loaded. It can take hours to answer that question, but then I will maybe specific to the ISDB experience. Well, that although we all argue and believe that Islamic finance has a built-in sustainability and the environment protection and the greening and all that is already built in the core principles, but we never marketed it that way. So Islamic Development Bank, which has celebrated, alhamdulillah, 50 years of existence this year, has been doing this financing for 50 years, so it's not something for new. However, I would suggest share with our participants that we have ESG consideration on both sides of the balance sheet. Now, first, if you look at our asset side has we lend money or we project finance money in our member countries. We have 57 member countries, and we give them a project financing. So as part of that, we are always very conscious of environmental issues, the safeguards, and so forth. However, more recently, we have become more structured. And as part of that structure, we have a certain climate change policy in place, which is basically in alliance with international developments and as well as the other MDBs. So we have that climate change policy in place. And as part of the policy, we have developed a climate action plan. We were recently, and Mustafa, you were with us, we were in Baku last week, and there was a special a session on Islamic finance discussing about many of these things. So what we have at our level, at the IDB level, we have a commitment that by 2025, 35% of all our financing would be green projects, or at least the climate-related projects. I'm very pleased to share with you that Alhamdulillah, by last year, we have already achieved that target, and we have done 46% of our financing was sent to for climate purposes. We also have a commitment that by 2024, 100% of all our projects will be in agreement with the Paris Agreement, maybe compliant with the Paris Agreement. So on the asset side means that what we are financing, we have a good pipeline of these assets which are for climate, for the green financing, including the adaptation, which is we do more adaptation than the change or mitigation. And at that part of these includes renewable energies and sustainable cities and so forth. So that's on the asset side. Now, if you come on the liability side, given that we had a good supply of these green projects, back in 2019, we embarked on a project to develop a sustainable finance framework. And I must confess that I thought that getting a approval from a Sharia board is very difficult. But when we were doing our certification for sustainable finance framework, it turned out that was much more complicated than it is. But Alhamdulillah, we were rated very well. We were rated as a medium green shade, which is same like other MDBs like IFC, African Development Bank, KFW or so. Similarly, we got also a very low rating in terms of the risk from Sustainalytics. So this was all very good. And by 2019, we used that framework to issue our first green Sukuk in euro worth 1 billion euro. So that was a success, instant success, and we had a very good reception by many of the European investors who were very committed to climate. And frankly, some of these investors we met only first time, gave them our value proposition, and they came on the transaction. So anyway, I won't take much of the time, but then following the Green Sukuk, we issued one of our largest sustainability sukuk, which was done during the COVID time, followed by another sustainability sukuk of $1 billion in 2020, I believe, or 2021. So given that, I think we say that we are one of the pioneers in the multilateral or Supra's green sukuk and sustainability sukuk issuance. We are now looking at many different forms of sukuk, whether it's a impact or outcome, and we hope that we do come up. We are the first one to do such transaction. Thank you so much. Mustafa, the only thing I want to maybe bring to your attention that unfortunately I have another meeting at 1 o'clock, and unfortunately I need to leave by then. But our treasurer, Mohamed Sharaf, will be online and he could substitute me if that's okay. Thank you so much.
Of course. No, thank you, Brother Zamir. First of all, we appreciate, your patience with us because we did run a bit late in the program, but we value the fact that you stayed with us and in your absence to have the treasurer participate as well. On the items that you mentioned, I think you mentioned a couple of very, very interesting and pertinent points, and 2 points that I will dig on a little bit later. One was the marketing and positioning of Islamic finance as sustainability and how that has, was not initially done, and how we can take that forward. And the other, I want to congratulate ISDBi on the comprehensive approach to establish a framework to look at both the asset side and the liability side. And a consequence of that development has been the issuances that have come out of IDB, which is one of the top 5 global issuers when it comes to sustainability linked Sukuk. And I will touch on these again with you. I want to bring Luma into the conversation, and I want to hone in a little bit on some of the trends that we're seeing in the Sukuk space, right? And Luma, obviously you have visibility on institutions that operate across a huge region and extensive experience in the Islamic finance side. What are some of the trends that you're seeing when it comes to sustainability considerations for Sukuk? And in particular, as Dr. Zamir mentioned, they developed the sustainability framework for IDB, but framework development and regulatory frameworks in particular is something that a number of different stakeholders have asked for to give them clarity. So how do you see that evolving, and what role do you see that playing in the Sukuk space going forward?
Sure, thank you for that. Obviously, when we talk about issuance, then we automatically talk about frameworks, and the reason is if you want to issue sustainability, any kind of issuance, whether it's a Sukuk or a bond, you need to create the structure for the issuance. So the frameworks typically have governance, the type of assets that are going to be financed, and so on. So what we are seeing globally is this tendency to now have a format for how these frameworks should look like, and many regulations and many regulators in many jurisdictions have already made the framework and some of its requirements and even the type of projects part of the regulation. So you will see Malaysia, for example, we have SRI Sukuk framework, but also in our region, in the Gulf region, you will see that a number of jurisdictions, the UAE, Oman, and Qatar have already adopted similar types of regulations. But I think the frameworks are only part of the issuance story. The frameworks are, as I said, create the structure and the ability, but what we need and what is being progressed is a number of regulations that we need to complement that. So we need more clarity on things like disclosures generally. We need more regulations on issues or how we combat greenwashing when you're issuing to the market. How do you create the correct features? How do you convey trust and transparency to the market? So these kind of issues. What is green? What is sustainable? How do you define those? Taxonomies are still missing in our market. Regulators are working on that. Another very important topic which is a combination of the need of regulations, but also the market needs to move more towards it, is asking more and more companies to have strategies, to have transition plans. And the reason for that is I guess, twofold. One is we're saying that all of these issuances are to finance something, and that something is what we call creating the assets. By having a strategy, by having a transition plan, you are showing the market how you are actually going to achieve this and what is the funding required. It also adds that layer of transparency and more, again, trust in the market that me as an issuer, I have considered all the climate issues, the sustainability issues that relate to me, and I am able to deal with them. Therefore, give me your money so that I can repay you, basically. So all of these things we're still looking at them. We're in a good place, but we need a lot more, especially in our region, in the MENA region.
Yeah, I was basically exactly going to ask you that, because we do hear all of these regulatory frameworks are being established, but how far do they go in terms of tackling the disclosure limitations that you mentioned, the transparency issues, the absence of perhaps strategies at an institutional level. How, from your perspective, I mean, are we halfway across the journey? Are we near the finish line? Are we still getting started? Where are we?
It very much depends on the region, on maturity of the market. Our region, we're still right at the very beginning. One thing that has happened, you're probably aware, the climate law, law of the UAE that has been issued recently, although it will come into force next year. But what it does, very importantly, is that it's going to set limits on emissions by sectors and have plans. That will automatically drive the market how to respond, because now it's law. So how do you then create, again, those assets? How do you create transition plans to follow those regulations and therefore be within the law? But that will automatically help creating what finance I need in order to achieve that, and therefore hopefully have a positive effect on the market. This is the UAE. We need to see a lot more from our region so that we follow suit.
No, that's excellent, Sister Luma. And I think that, it's always good to have that sense check while we, pat ourselves on the back for the development that we have achieved. It's good to be realistic as to how far along the journey we are. You mentioned about the GCC, but another region that is very, very significant is Turkey. And I would like to bring Sister Fatma into the conversation. We had the benefit of, speaking earlier about the development of Islamic finance overall, or participation finance overall in Turkey. But I think if you could give us a sense of how the Sukuk space has developed, how Turkey is utilizing Sukuks and Sukuk financing as part of its national strategy, and where the ESG or sustainability considerations fit into that. Sister Fatma, please.
Thank you very much, Mustafa. I just want to continue from the way Luma stated that the discussions, the implementation process of those frameworks within the markets with a specific level. So Turkey is really taking an advantageous role that the Turkish government, after a commitment to be a party of Paris Agreement in 2021, the market immediately responded to those official commitment, and our first social and green lease certificate, we call internally Turkish Relations of Lease Certificate, but it's Sukuk. First Sukuk transaction realized in the market. But considering the framework understanding and perspective, at those transactions, first lease green Sukuk transactions, first the banks prepared a framework agreement. So what are the inside those framework agreement? I think we should, when we check the areas, content, we can understand the change. I mean, for those debt management or borrowing understanding. At this framework, first you should deliver your commitments for the international practices. For example, in this green framework, the banks making necessary commitments to align with ICMA, this International Capital Market Associations, green bond, social bond, and sustainable bond guidelines, for example. Plus, as Dr. Zamir expressed, ISDBi's green sustainable finance framework, their alignment with those framework, and also Turkey, in addition to ICMA and IDB, they are also taking loan market associations principles, green loan and social loan principles. So I specifically communicating over these principles because the banks who is going for international issuances or local issuances, generally mainly concentrating on the investor side, pricing quotation side, and also some utilization side. But now they should also take care about those frameworks and those eligibility criteria and principles. So that definitely this is something, let's say, a financial education for the industry to read those principles and understand how they should utilize this financing. This is, I really put great pressure on that, and not just one department considering this alignment with those principles. In addition to international banking, investment banking teams, also credit teams, and also the management of the bank, and also some compliance teams, some other departments, relevant departments should be within the projects. This is another understanding and very useful perspective to have a holistic understanding as a corporate culture for sustainable finance is very critical for us. Other point that I will give some insights that, for example, at this frameworks, use of funds obtained from issues. This is the area. Project evaluation, you see, the team also looking for project evaluation and selection process. They should deliver those commitments to the investors. Management of those funds obtained from the issuances, how much period they can keep the funds at the recourse, and this put a pressure like 90 days or 3 months to utilize these funds to the market as much as earlier. But in previous transaction, in common sukuk transaction, they can keep the funds and look for eligible projects. But there's also timing pressure on the banks to deliver this funding to the market as much as possible. And very important sites, reporting sites. I think this is very critical. Now we have the topic of impact reporting, impact investing reporting, which is very critical to communicate the impacts, values of those transactions to the market, which are completely aligned with Islamic finance or local language or participation finance principles. I want to just kick the discussions from where Luma stayed about the understanding and just go to some very insights in addition to my brother Sabri's expression about the market. Turkish participation banks, totally starting from 2010, they issued mainly Turkish lira transaction with small tickets in the local markets, but equivalent of $14.3 billion equivalent of Turkish lira issuances, but the average maturity is 5 months. That would be surprising for some participants because this is the local conditions within the market. So referring to Dr. Ghiath's also expression about the local currency issues, I strongly emphasize the importance of understanding local market dynamics and the terms according to this dynamics. Wakala structure is the commonly used structure in those transactions, and I would like to also highlight the top issues in the Turkish lira side. A very close ratios, you know, one of our Islamic banks, Kuwait Turk number 1, Ziraat participation and Waqf participation banks number 3 and 4. They may change, but all the banks actively issuing Turkish lira sukuk, which is one of the main source of funding from the market. This is critical for us. And when we come to the sovereign side, Turkish Treasury, they are also very actively in the market. I mean, in Turkish lira, something equivalent on $10.3 billion, but the maturity is 4 years. In the local market, 4 years. And they in local market, they can issue dollar, euro, and gold denominated sukuk transactions. But private sector, the banks cannot issue foreign currency denominated sukuk transactions in the markets. And gold denominated transactions with a number of deals, 52 deals. Gold denominated transaction issued by Turkish Treasury since 2007 to 2024 because the markets characteristics. Gold is one of the saving instrument in the market, and average is 2 years at this side. So when we come to the non-bank, or we call non-bank, it is company side. In addition to banks, our companies also actively issuing sukuk transactions. Till now, they started 2020, just 4 years ago, but the figure reached to around 60 billion Turkish lira and approximately 319 transactions executed, which small ticket, but actively corporate sector also in the market. When we come to the social sukuk issuances, first social issuance of Turkish markets came in 2021 by Investment Development Bank of Turkey. This fund utilized for the farmers, for the working capital need of the farmers with Muraba financing. I just want to emphasize the importance of the penetration of Islamic banking with Islamic banks, but also investment in development banks, because in Turkey, they also have authority, license to provide or to take Islamic financing and utilize it. And also first, also the green side, totally we have the volume of 2 billion Turkish lira green sukuk transaction. A Turkish wealth fund issued, for example, 600 million Turkish lira green sukuk transactions, which they are also quite active in the market. So I just want to stop here just to give some market insights, and at the next session I will give some transformation understanding. Thank you.
Thank you very much, Sister Fatma, and I completely, acknowledge and echo many of your statements. Initially, when you talked about the importance of aligning with best practices, to have a holistic approach in engaging the different segments of an institution, looking at use of funds and reporting, I think those are some of the critical areas that the industries look at. And your overview of how this market in Turkey has developed and how it is such a unique market with a lot of depth in terms of the number of issuances and a lot of innovation in terms of the short-term local currency issuances, gold-denominated issuances, social linked issuances, I think is fantastic and is a great opportunity for many other markets to learn from that experience and see what could be replicated for the benefit of the different markets that operate in Islamic finance. I want to bring Brother Ahsan into the conversation. And, Brother Ahsan, in many ways, you are one of the most important people in this panel because you represent the actual end investor or the buy side for many of these sukuk issuances, right? So your views obviously are going to be very, very significant. And I wanted to, basically ask you to talk about how you view ESG sukuk or sustainability linked sukuk as an investment asset class. Obviously, Ahl United Bank now, merged with Kuwait Finance House as an institution has a very significant sustainability strategy in terms of incorporating sustainability considerations that obviously will hit your investment portfolios as well. So how do you view the current ESG, sukuk market as an investor or from a buy side perspective?
Thank you, Mustafa. That was a very welcoming introduction. So, as you rightly said, we are the only buy side right now to discuss in this panel and how we look at the situation in terms of sukuk market. But let me give you a little bit of insight as well from our background. As you rightly said, we merged with KFH, and as a group, we are much bigger, second largest Islamic bank in the world. But we were a conventional bank. Ahl United Bank was always a conventional bank, and we built assets using conventional assets. And alhamdulillah, end of last year, we converted Islamically. Now, having said that, there are challenges, and biggest challenge is the availability. If you look at it from I manage the banking book in terms of the investment in the securities of Ahl United Bank. Previously, we had the world to invest in when it comes to spreads. And you rightly said, I believe Fatma mentioned that majority of issuers think about the pricing, and we as a buyers, we're always thinking about the pricing as well. Now that we are becoming Islamic, the sukuk space shrunk dramatically, and the options availability is limited. So what my demand is as Ahl United Bank will be mimicking what the demand is for the parent company, which is KFH, because we are buying from the same pot. Having said that, this basically goes towards the availability of ESG assets as well. It limits down the availability. We purchase and we invest in publicly traded investment. Yes, I hear the rest of the panelists saying that it has increased, the financing has increased, but these financing has increased mainly in the buy-side space and in the structured investment space. But if you want to be your buy side and you buy only from publicly traded securities, then your options are extremely limited. I can give you a couple of examples that in my head that I've discussed it with you guys before as well, is that in Asia, you see Indonesia issuing a green sukuk. And then in GCC, which becomes even more limited, you have the same names issuing at MAF, DP World, and all of that. So we, as a bank, there is only amount of limits we have to purchase these entities. So it will be going throughout the same circle. Now, the bigger issue that we face is the implementation or the accountability of whether this is real ESG. Are these funds actually being used for the ESG? From a regulatory perspective, we have a regulatory framework done by CBB, Central Bank of Bahrain, and we are asked to increase our green exposure on average 10 to 15% every year, which is doable. I don't think it's because we start from a very low base. The question is the funding actually being used? Because my worry is that this continues to be misused in terms for the issuer to issue at a lower pricing rather than the actual usage of the fund. I'll give an example because this is similar what's happening in the Sukuk space. Now, in the Sukuk space, we started to see a lot of conventional bank issuing a senior unsecured Sukuk. Now, if you go into the prospectus of these sukuks, you will see that they do not have specific asset allocated towards this borrowing. It's a pool of assets, and this pool of assets is actually monitored properly. In fact, it's audited once every quarter, right? So you can lump sum any sukuk, any asset and keep it accordingly. The similar thing is going to happen with ESG. They will put some green project which already been there just to put it in a this makes our job tougher. It went to a different level as well when it comes to sukuk, the dynamics of how sukuk is happening. Now you're seeing conventional banks issuing capital in a capital instrument in sukuk format. So if you're a conventional bank and you're issuing capital in a sukuk format, by law you just increase your single obligo limit in all the names out there, right? Just by having a big buffer in capital. How can you just say that this capital will only be allocated? Who's actually monitoring it? Once a quarter, once a year, you will make your framework quite easy and have a snapshot. But when it comes to buyers, we question these. And if accountability and transparency does not exist, we will struggle. So this is the biggest issue. Right now, what we see, sukuk is being issued for the sake of getting a sukuk premium, i.e. lower pricing in terms of the issuer. ESG is another phenomenon where now you have a double discount for the issuer to pay less. We'd rather see these framework being used in the actual purpose of it rather than the pricing only, because we'll end up struggling to justify these investments as a buy side.
No, thank you very much for that, Ahsan. And I think you've raised a number of very pertinent points. Obviously, on the availability, we in the market always say that, there's a dearth of sukuk overall. If you filter that down to ESG, it's an even greater, absence of investable instruments that you have. So that is a major concern. And I think the other point that you mentioned regarding the accountability for these instruments, and I think that echoes a lot to Luma's point as well when she talked about disclosures, transparency, combating greenwashing. We need to have the mechanisms in place that can give investors comfort to make sure that what is being claimed or what is being proposed has a mechanism of monitoring attached to it that can ensure that it is not just an exercise in, as you said, securing capital at a lower price or investment at a lower price, but it is something that aligns throughout the life of that instrument with many of those claims that are there. And I think that as we go through, we will delve deeper into this issue of some of these disclosure challenges that exist there. But I want to bring Talat into the discussion. And Talat, we had a lot of conversations around the financial institutions, how they approach this, the frameworks in place and the instruments. But what about the broader global energy transition that we're talking about, right? We want the world, as is our commitments through the Paris Accord and others, we want to have an energy transition towards a greener, more sustainable ecosystem. So where does sukuk fit into that, right? How can the sukuk instrument play a role in the broader energy transition? And what are the areas that perhaps the conventional instruments are not tackling that maybe sukuk could play a greater role in addressing?
Thanks. Thank you for that. That's it's a broad question. It's one that's on the top of everybody's minds today. partly because we are in almost the end of the COP29, where we're talking about climate. And I think this is one of the most fundamental concepts to be considered. But before I get started, I have to just say that I completely understand and agree with what the other panelists have said about accountability and greenwashing. These are extremely complicated issues that are popping up in conventional and Islamic finance today. And I think that this is probably, as Fatima said, she tried to emphasize a little bit about that reporting and accountability through the mechanisms in the financial structures, for instance, under things like the green bond, or sorry, these actually there's sustainability sukuk principles that ICMA has issued. So when I'm talking about sustainability, or when I'm talking about sukuk, I'm actually talking about the entire suite of sukuk, whether it's related to green or blue or social or sustainability or climate transition related sukuk. And so I think we have to realize that sukuk isn't a singular issue. The Islamic capital markets have a critical role to play, as all capital markets do actually, in facilitating the climate transition. And that's really that transition to a lower global carbon economy. And in some cases, the commitments to net zero. And there are diverse opportunities that Islamic finance provides to address climate change, including the carbon markets. The IFM report that's been released shows how ESG and sustainability sukuk are linked. There is an increase in investor demand, but it's demand for high quality products. There is a move to innovative solutions for climate transition that can be financed through sukuk and other Islamic instruments. For instance, because it's real economy, it's asset finance really, and the need for sustainable development financing, especially for SMEs, which is often where innovation and needs meet, and where the GCC countries and others actually probably have a really good ability to make change, provide these opportunities for impacts of sustainability sukuk on the global net zero transition, really. In terms of that transition, green sukuk have already been used for financing. They've been used for financing solar plants, wind farms, so the renewable energy sector, energy efficient buildings, mostly we've seen out of Malaysia and other countries, low carbon transportation, whether it's electric vehicles or public transit. An area that I see developing actually is energy from waste. We certainly are having a lot of issues curbing our waste, but I think as a resource, our waste is actually not lost. Energy from waste is a significant area and part of that circular economy. And all of that obviously contributes to climate protection, climate change mitigation. Again, it's always the countries that are probably the most exposed, that have the least ability or the least capacity or the least connection to the markets to help them use instruments like green sukuk. And I don't have to explain the Sharia principles that green sukuk align with, but it's really significant because of the fact that we're stewards of the earth, and also we're innovating as intelligent financiers as well. So carbon capture and storage, for instance, technologies like that are helping to move the energy transition along are very much topical in the region and in carbon markets as well as climate finance. Sustainability sukuk can change the perception of the global challenges. Greenwashing obviously has potentially in conventional finance. I think the risks are almost higher because of the fact that adding the Sharia layer for the review of green or sustainability sukuk actually helps to address some of the greenwashing challenges that are very real and probably not even fully understood what equals greenwashing. It can be anything from the naming of something as green or relating to an impact to actually not being able to justify it in the form of reporting. And I think that this the comment that Fatma made about the ICMA principles, the use of proceeds, the process for project identification, the allocation and the impacts, reporting and the management of the proceeds, that adds a discipline that's required in order for us to facilitate more green finance or sustainability linked finance in the Islamic finance space for the climate transition. And I think all of it is focused on the sustainable development goals at the exact same time. And again, Islamic finance, the difference, I think, in green sukuk and or sustainability sukuk and conventional finance is that when you're looking at conventional green finance, you're thinking about the green aspect of it. But when you're looking at the Islamic finance part of it, you'll see that the green finance frameworks or the sustainability frameworks of the issuers are actually including the UN Sustainable Development Goals and how they link up. So it's those co-benefits that sustainable Islamic finance and sustainable sukuk can provide, whether it's to a renewable power or clean transportation project and the social impacts of that, the ability for people to get to work, even the gender impacts of providing access to power to clean power for women who are running homes or for children who are going to school, the sustainable agriculture and forestry and natural ecosystem restoration that a lot of Islamic countries are actually becoming involved in, mangrove restoration, for instance, recognizing the issues with coastal degradation, energy efficiency, obviously, and we see it in buildings, and you can see the social benefit of having energy efficiency in buildings, sustainable, clean buildings, smart grids, the circular economy, like I said, putting your waste to use has more impacts than just the clean power it generates. And then, of course, all of the tech and innovation creating more jobs and the type of jobs, sort of adding an intellectual discipline to some of the R&D outcomes. And then there's the social the social aspects of the sukuk just generally, which is just access to basic infrastructure and clean power and clean water, access to services like healthcare, all of it coming off of a sustainability-linked sukuk type product, rather than just conventional finance, because it includes the UN Sustainable Development Goals or the Sharia principles. So I think that's how green finance, sustainability-linked finance is actually in the Islamic finance space is actually more beneficial than toward the climate transition, for instance, than conventional finance.
No, thank you very much, Talat, and I completely agree. First of all, what you mentioned specifically about some of the most exposed countries being those that may not have access to the capital markets because there is the demand for high quality instruments is obviously concerning, but the focus on addressing reporting and accountability, the focus on innovating in terms of the type of instruments that we use, and you named many different ones that can be utilized in a number of Islamic markets to help the social considerations for that is good. And another thing you mentioned, which if time allows, I hope to come back to, is carbon markets and potentially maybe international carbon markets where you can have cross flow of these assets would be something that can again go a long way to address some of these net zero challenges. And if time allows, then I will come to that. But I want to bring Lawrence into the conversation. And Lawrence, thank you for your patience as we go through and the delay in the time. But, Lawrence, you're somebody, we've had many conversations. You have, a truly global view of the Islamic finance industry by the nature of the fact that, DDCAP, I think, operates in, I would say virtually almost every single Islamic finance market, supporting different Islamic institutions in being able to roll out. How do you see the development of an instrument like Sukuk address some of the challenges, and in particular, how Sukuk issuances can contribute to the 2030 agenda for sustainable development or sustainability agenda in general.
Mustafa, thank you very, very much. And firstly, if I may, I'd just like to thank everybody at IIFM for kindly inviting me onto this esteemed panel today, and also to congratulate them all on yet another excellent Sukuk report, which I know provides huge value to the industry. It's an interesting question. I think as an intermediary in the Islamic marketplace, we're DDCAP. We've always had a very much a top-down approach to our sustainability focus. It's something that from our CEO down, we drive that very heavily. And as an intermediary, we obviously get to see what is happening across the markets. As you mentioned, we do have this sort of global footprint that we're very proud of. So it does allow us to see how these markets are evolving. I think what's interesting is that obviously we're all aware that this agenda for sustainable development did challenge countries that they had to meet their SDGs within what really was a relatively short period of time. I mean, I think they've set it for 2030. And I think we're undoubtedly seeing positive developments in that space. I mean, if we look at since those inaugural issues of Sukuk and Green Sukuk back in 2017 in Malaysia, thereafter in Indonesia, we've seen the traction that it's developing in the space. I think in the last year, I've just got it here, that we've seen, I think in essence, of about 13.5 billion of sustainable Sukuk issued in 2023, compared to 9.4 billion in 2022. So clearly there is a positive uplift in the volume of Sukuks that we're seeing being issued. I think if we look at what that is actually achieving for us, we're aware that there are always these sort of shortfalls in liquidities and making sure that we're meeting those funding gaps. I think the UK IFC here in the UK estimated only recently that between 30 to 50 billion of capital can be contributed towards the SDGs. In a relatively short space of time, I think they're estimating it by 2025. So I think if that can be sort of accommodated and brought to the market through the issuance of further green and sustainable Sukuk, and we're seeing even up to this week, the institutions coming to the market with more and more of these Sukuks, I think that we're definitely on the right path. OIC member states across the world, effectively we can look to see how we can basically use green Sukuk moving forward to find ways to attract further investment at scale to projects that are designed to reduce the national sort of greenhouse gases emissions, etc. So in line with what the Paris Agreement is suggesting. So I think the initiatives that the institutions are taking are definitely contributing positively. We're on the right path. But ultimately, I think I'd want to summarize that our friend Hassan made a very good point just earlier in his presentation. The big issue we're still seeing predominantly is, despite everything that I've just spoken about, there is still a lack of sufficient paper in the market to support industry requirement. If we look outside of Southeast Asia, I think we can confidently say that there is a distinct lack of a secondary market in the Sukuk space, because when these papers are issued, inevitably the vast majority of them are picked up to hold in the portfolio. And there isn't a trading environment in the secondary space outside of Southeast Asia, which I do recognise has a robust secondary market now. And that's basically courtesy of the volume of issuance that we've seen in that particular region, and that's a very positive development. But yeah, I think I'd summarise in this session, the big issue remains. We need more issuance. We're on the right path. Green Sukuk issuance is definitely rising. It's exceeding the growth of conventional Sukuk now, I think, in the last few years. So we're definitely seeing an upsurge in that, which is a positive sign. That needs to continue, but we need an awful lot more of it to meet the demands that are ever increasing now across the marketplace.
No, thank you very much, Lawrence, and I completely agree. As you've echoed Hassan's comments around the absence of the number of instruments that we need, and to add to that, the absence of secondary market trading in some of the big Islamic finance markets. And I think we don't have the volumes, we don't have the regularity of issuances that gives reliability, that if you were to sell something, you could buy a future instrument with greater debt. So that causes us to hold on to the assets very closely and eliminates that market, challenges that persist. And, I think it fits very nicely to my next question, which I will ask, Mohamed Sharaf, who has very kindly joined us in place of Dr. Zamir, who had to step out. But Mohamed, you heard from the panelists the different challenges regarding not having sufficient issuances, secondary trading market, issues around disclosures and transparency. And we know that Islamic Development Bank has done a lot. They recently launched the guidelines for with ICMA around green sukuk issuances earlier in the year and so on. But specifically, what can you highlight that Islamic Development Bank might be doing to support member countries in being able to build out or issue more green sukuk instruments?
Thank you, Mustafa. First of all, it's my pleasure, to join the panel with my fellow panelists. I think this is a very important question, actually. Why we're not the pace of ESG sukuk are not growing. Just let me give you some numbers and probably, out of IFM, some of the reports there. So the industry on the sukuk outstanding balance is probably around 1 trillion. That's where we're hovering around. I think it's only 5% up to 7%. That's what we expect to be the ESG and green sustainable, sukuk. One of the, at IDB, we see it on that, first of all, it's the ecosystem. First you need to get your sustainable finance framework right. And by the way, when we say we get your sustainable finance framework right, it addresses a lot of the questions coming out about greenwashing, about using this as a label just to attract capital or not. So getting the right vetted sustainable finance framework that have been in place, aligned with the ICMA principles and I would say vetted by a lot of stakeholders before putting the sustainable finance framework is very important. Now, we're trying to do this as an IDB, as you mentioned, when we did this guidance notes about issuing of green and sustainable sukuk with ECMA and London Stock Exchange, this was the principal motivation. I think, when we discussed this with ECMA and the London Stock Exchange group, they were at once, yes, we're happy to do it. So I think that's one of the very important pillars, that we make sure that the guidance notes and that most of those guidance notes are frequently updated and aligned with the ICMA principles. On that angle, there it's very important. And I think I've been receiving a lot of calls from issuers, some other treasurers on Islamic banks asking for updates about this and how we can provide technical assistance, going out from our experience on the GSSS market. So we've already providing this. And so other than the guidance, the frameworks, and the technical assistance, I think another part of it that we do as an IDB, because we're not only issuer, I think we are one of the biggest investors in the sukuk market, so we hold a portfolio of around $10 billion, of sukuk, So eventually on the buy side, we try to put a priority for investing in green sukuk and, sustainable. And I've listened to some of the, we look at a lot of those issues. We look at the angles of greenwashing. We look at the angles of whether this is, is really sustainable issue or not. But I can tell you that, yes, some of it is trying to use the green label, but eventually we see that this is a trajectory that we will see decrease by time, as we talk about reporting and disclosure, and it's getting more strict at this point of time. Investors have a big hand now, so request a lot of updates from when we invest. We look at a request of updates on their impact report, annual sustainable finance, impact report, how much of those proceeds were being used. And since we are one of the biggest investors in the market, I think a lot of the issuers started now to respond to, what kind of disclosure that you would require. Now, noting that our rating, as a AAA institution, we provide some of those reports that we get from, the issuers that we invest in, even to our rating agencies, about how we're trying to develop the market and how to make sure that, our mandate is not only, investing, but also promoting the ESG market. Yes, I think I've listened to some of the shortcomings that is already on the market. Still, we have to understand that this is a nascent market. We need to give it some more time until we start to see this, getting into the core of the issuers itself. Now, by time we see that a lot of, I would say, the issuers start really to adapt and align themselves and orient their teams around the ICMET principles, which eventually we do the guidance note about it. I think it's a matter of time, and we see much more progress on the issuance on this side. The last point is that, as you know, the Sukuk is, whether you call it asset-backed, asset-based, I don't want to go to this at this point of time, but it needs time to create the assets that will be backing the Sukuk, and we see a big increase by time across the region, and it's even in Indonesia and Malaysia, by creating those kind of assets. It's not easy, especially on the infrastructure assets. It takes around 3 to 4 to maybe 10 years to see these green assets ready to be backing Sukuk. So what we see is that this trajectory is coming. I think the more we find green assets, backing, our Sukuk ready, then we will see an increase on the AG market. Thank you, Mustafa.
No, thank you very much, Mohamed. And I completely agree with the points that you've highlighted. The fact that we have to align international standards and continue to align with the developments that are there. The fact that and one of the things maybe we didn't highlight as much, but the greater awareness amongst investors like yourselves about, it's not simply sufficient to be green, but what type of reporting is required, and mandating the issuers to provide that reporting to you creates that increased disclosure and brings down the impact of things like greenwashing. And finally, creating assets takes time. So the need to create the green assets that will then back the issuances is something that is there. But I think we're on the right track, as demonstrated by the growth rate that we have seen here. I know the time is a little short, but I do have quite a few other questions that I want to get to. So maybe if I go to Luma now, one of the things that, Dr. Zamir mentioned right at the beginning was around, we never marketed Islamic finance as being sustainable initially, right? And we've had many conversations around, is Islamic finance sustainable? Is it going far enough? How does that fit in and whatnot? What's your perspective on this area? And when can we get to a point where we will be viewing Islamic finance as something that is ESG aligned and sustainability aligned?
Yeah, so I'll talk more from as you know, I have experience in both Islamic finance, but also the investor side. So I'll talk a little bit more from an investment policy side. When you look at the Islamic finance principles and how they are perceived, they start with the negative screening list, and there is no question that the negative screening list is compatible with the sustainable principle. But there's always that question of, is that sufficient? Is it not sufficient? Now, I'd split that into two parts. The first thing is from a sustainability point of view or an investment policy point of view. And if you look at, for example, when you look at the PRI principles, and when we discuss what are the investment policies that are typically used by global investors, negative screening is one of them. And it so happens that in Islamic finance, we are specifically talking about, for example, sectors, a particular way of trading that it has to be money on its own does not create money. It has to go through trading or partnership. So there are particular ethical rules that all relate to society. So from that perspective, it is an investment strategy, let's say. And so when you want to tick the box of responsible investment, it ticks the box without anything else. However, what has happened in the market is that there is a very, very conscious drive towards two things. One, climate, which is a big thing, but the other thing also is impact, creating impact and wanting to measure impact. What happens with Islamic finance is when we follow this negative screening list, we are achieving something that is more ethical, more sustainable, more for the community, but we're not measuring it. So it is so hard to say, here is the result of what we have created. And therefore, when investors globally are looking at, do we want to buy this or not? What they have aligned to is they have put their own criteria of what what it means to them, what investment should look like, what impact they want to create. So they are asking Sukuk issuers to create that impact. And actually, I wrote an article about this last year, about moving from halal to tayyib. And halal is that negative screening list, and tayyib is creating impact. So Islamic finance ticks the box on sustainability, but we're now at the stage where Islamic finance is being required to have impact. And a great example is the ISDBi Sukuk, because in its essence, it is already Sharia compliant, therefore ethical, therefore responsible. But the market is asking them for more. So they had to create their framework, climate objectives, and so on to comply with the impact part. And I'll stop here, but if you have further questions.
No, I think that aligns I completely agree with you, Luma. And I think, almost I would say that measuring that impact is almost getting us to Sharia compliance 2.0 in a way, right? Because, it helps to showcase, bring the transaction to full circle. It helps with the naysayers who challenge us on Islamic finance to say that, what is the difference? It helps showcase in practical terms what that difference is, and aligns much more closely in terms of enabling the institutions to be able to select not just between two items that are compliant from a negative screening perspective, but what will make the most positive impact for society as well. I am mindful of the time. We have about 12 minutes left, but I would like to, get at least one more word from each of our speakers. And Fatma, I want to bring you into this. And, in the earlier question, you reflected back on how the Sukuk market has developed to meet the existing conditions for the Turkish market domestically, right? But looking ahead, obviously Turkey has a very, very significant green transformation strategy and agenda in front of it, right? So where do you see the Sukuk, the green Sukuk or sustainability-linked Sukuk playing a role in that? Very briefly, if you could just share a few highlights with us.
Sure. Thank you very much. Very briefly, I just want to emphasize the maturity of financial infrastructure of Turkish market for onboarding sustainable finance and Islamic finance, because Turkish governments and also its commitment for International Sustainable Reporting Board, and we nationalize them, sustainable finance reporting. And coming year, in 2025, all the financial institutions in Turkey will be reporting both financial reporting and sustainable finance reporting. Definitely, this is an amazing advantage for us. It is quite tough, of course, for the market, but now all the banks and also financial institutions dedicate to enhance their capacity in terms of onboarding sustainable finance requirement, eligibility requirements, trainings, and also having necessary adaptation in their cultural and also organizational developments, and plus loan or let's say financing allocation strategies. And so as an association, I'm closely following these issues, because we also established a sustainable finance committee under the association. Now we are coordinating sustainable finance reporting sites. So those are the developments. They say infrastructural structural changes in the market, which will lead to concentrate on two sides. One side is necessary financing to finance projects for this sustainable transition, green transition size of the industry. As Islamic banks in Turkey mainly concentrating on real sector and SME sector. For example, the SME portfolio of Islamic banks in Turkey is around 43%. However, the general market portfolio for SMEs is around 24%, which is something quite double portfolio. So which means that their customer will come to the banks and ask for necessary financing for this green transformation. They need to do some investment for taking machinery, increasing their number of women working in the companies, and also taking necessary caution for the projects. So this is demand driven, top and down from the government regulatory side, but also from the market side, demand driven transformation will be in the market. So, but the banks will be intermediaries for this financing. Turkish banks, I'm expecting from their own sources to finance those companies, but they will of course go to international markets. So taking financing from NDBs and also international markets. Our advantage is the banks used to get this finance And anyway, the current Sukuk financing, even concentrating on this renewable energies and clean energy and some waste management. So it is something not new to the participation banks in Turkey. They are considering participation finance principles. They are using this financing and also those projects. But what will be highlight, especially reporting sites, because, for example, not just claiming that energy efficiency projects we are doing. No, they will also claim that under this framework, under this SDG code, you see just an example for energy efficiency, they will tell that this project will increase energy efficiency at this 15% or reduce energy consumption at this 15%. And which SDG? SDG 7 and SDG 9, you know. So this will give much more reporting alignment to the banks and align those requirements. And finally, I want to also finish with that. I was at COP last week, which I experienced a great advantage that within the panels, I was with MDBs, conventional banks, investment banks, and we talk about blended finance. So I'm expecting some structured blended finance deals mobilizing public and also private sector investments within the platforms and the projects, which will be utilized for different segments of the customers. Thank you.
No, thank you, Sister Fatma, and it's very great to see the structural changes that you have highlighted, and I'm sure that they will drive the development of the right type of assets and financing that we require. And on the COP note, I was also there last week, and it was great to see Islamic finance play a role. And this is maybe where I want to bring Lawrence in. Lawrence, over the last 4 years, we've seen since COP26 in Edinburgh through to Egypt, UAE, and now Azerbaijan, Islamic finance has been on the COP agenda. What would you say has been some of the big highlights or developments for Islamic finance and Sukuk because of the prominence that it gets at events like this, please? Very briefly, please. Lawrence.
Certainly, very briefly. I mean, I think undoubtedly what we've seen as a benefit of the various different COP events that have been taking place recently in Muslim countries, which has been very positive as well, has been far more global acceptance now of the significant role that Sukuk and the Islamic finance industry can play to the further development of the sustainable space. I mean, I think these initiatives, if we look across what we're seeing in countries such as Saudi, in the UAE, in Malaysia, and now more recently in Turkey, etc., we're seeing huge positive strides being taken. And I think what those various different COP events, right up to Fatima just mentioning there, the COP last week that you were both at, I think that global awareness of what benefits that can be derived from the use of Sukuk and green Sukuk in particular, and the focus what this has developed is far more understanding of where the benefits are and what can be done. And I think we've seen on the back of that more and more institutions. I mean, Dr. Samir earlier was very kindly speaking about the huge steps that he and Mohamed and everybody at Islamic Development Bank are taking in looking to bring more and more of this paper to the market. I would hope that that's going to continue. I think we're at a stage where there's a lot more to be done. But I think the stage we're at now is we're in a positive stage. We know we need more paper to be issued. But I think these various COP events most recently have brought to the forefront a far greater understanding of what is available in the market and the benefits it can derive.
No, I completely agree with you, and I think it's been instrumental in generating some of the growth in these instruments that we've seen. And we very much hope that momentum continues, and Islamic finance stays on that global agenda when it comes to the discussion around climate change and tackling climate finance. Talat, I want to come to you very quickly. One of the things that we know that is going to be instrumental in being able to address, the climate challenge is going to be carbon trading, right? And carbon markets and being able to access assets in different jurisdictions to be able to support that net zero transition. Can you very briefly, quickly comment on that and how significant that is going to be in the years to come?
Yeah, I mean, there's a lot of controversy around the carbon markets these days, but one of the things that is quite clear is that this COP has probably done a little bit more than was expected. So I think, I think I'm slightly more optimistic than I was before, I think Wednesday last week. Almost all of the GCC countries and the OIC countries have pledged to achieve net zero emissions either by 2050 or 2060. And that sounds like it might be doable in some way, but I just don't believe that you can meet net zero pledges without carbon trading. It's probably the most important initiative required to meet these commitments. But the problem is that the technologies are still developing. The supply and demand for the credits are still, as has been mentioned, generally they're still in their infancy. And so even though there's a great opportunity in GCC and OIC countries, because they have the potential to be both buyers and sellers of carbon credits, it's not just the requirement to reduce carbon, but also to innovate and generate carbon credits, whether it's wind and solar power or reforestation or mangroves, as I mentioned earlier. But innovations like carbon capture and storage or direct air capture, which are developing and can result in some of those reductions and abatements, are still taking a bit of time. So although the concept of transition finance is actually helping, because before there was this whole, I guess it was a negative perception that you can't be green if you are brown. And so this whole accomplishment from brown to green, or this achievement from brown to green, is actually acknowledged now. So we've started to see the development of carbon markets. We've seen Abu Dhabi's involvement in exchanges. We've seen Bahrain, Safa. We've seen Oman and its Green Alliance, for instance. And most importantly, I think it was you who mentioned, Lawrence actually just mentioned Saudi Arabia. So I think I'll just cotton onto that one. And that is that they started, PIF and Tadawul have their regional voluntary market company, which was established. It had its first auction in 2022, where it sold 1.4 million carbon credits in the voluntary space, mostly to Aramco and the Saudi Electric Company and Enowa which is a NEOM sub. And then in 2023, I was in Kenya with them actually when they did their second auction, and it was the largest then, which was 2.2 million credits. And now last week they announced that they have sold 2.5 million tons of carbon reduction and abatement credits, and they're from various jurisdictions in the global south, so they're actually helping with the co-benefits. And also the launch of their voluntary carbon trading platform, which, as you would expect, Saudi Arabia expects to be the largest in the world by 2030, or at least in the region by 2030. So you can see that there's a huge push for voluntary carbon trading in particular. And I think that, you can't just have Sukuk, and you can't just have other forms of green financing. Carbon trading is another form of green finance, and I think it's essential, and the market in our region is doing really well.
No, I completely agree. And even as London Stock Exchange, we prioritize it very highly to have the voluntary carbon market and to have these international partnerships with the likes of the Tadawul, ADX, and other exchanges around the world to help facilitate that cross-border trading. Because unless you are able to move that capital around, we're never going to achieve our net zero commitments or targets. Ahsan, I want to leave the last word to you, and I want to bring you in. As I had said previously, as a representative of the buy side, as an investor, as somebody who feels the challenge of not having enough investable instruments. I mean, throughout the session, we had discussions around everything from reporting to creation of green assets to, internationalization of standards and so on. From your perspective, if you had one initiative that you would want different stakeholders to focus on that you think could unplug or to enable the free flow of these Sukuk instruments, right? What is that one thing that you would want, whether it's regulators, policymakers, multilateral institutions? What is the one thing that we as an industry should be focused on to help bring green Sukuk up to the level where it's able to meet the demand that is clearly there in the market?
Thank you, Mustafa. Keeping the most difficult questions for the last person. Well, to be honest, I can sum it up with one word, it will be transparency. We heard greenwashing so many times in this panel. There is sukuk washing happening as well as we speak in a lot of conventional banks. Transparency will make our life much easier to grow. We as buy side, we would love to support this segment. We want to support this segment. We want to increase our exposure, avoid focusing on pricing only and getting advantages from a pricing wise. Be focused on transparency and buyers will come. Buyers will come. Don't make a short tenor pricing lowest to get your premium discount. Even if it's a 30-year sukuk that is ESG related, look at Indonesia. It did it, the 2054 maturity of sukuk. We were large buyers of that paper. We would love to buy similar paper from GCC where there is transparency and not focus on pricing only. So I'll leave it there.
Transparency is the key. No, I completely agree, and thank you for closing that on that strong note. With that, ladies and gentlemen, we come to the end of our panel. I would like to thank my esteemed panelists for their time and for sharing their experiences and their insights. It was a privilege to moderate this session with you, and I would now hand it back to the organizers. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Brother Mustafa, and the esteemed, of course, panelists for this very interesting topic. As per the IFM report, ESG linked sukuk are on the rise as we. You don't hear me? It was mute or what?
No, we can hear you.
Okay. As per the ESG linked sukuk, as per the IFM report, of course, the ESG sukuk is on the rise. Perhaps because it is close to the goals and objective of Sharia in preserving the environment. So we need more, issuances of these types of instruments, of green sukuk, especially from the Islamic countries, inshallah. And hoping to overcome the challenges mentioned in the discussion. So we thank you very much and appreciate all of you. So ladies and gentlemen, as saying goes, to every beginning, there is an ending. But before today's come to its end, I would like to invite our Honorable CEO, Mr. Ijlal Ahmed Alvi, for the closing remarks. Over to you, Abu Mohamed. Abu Mohamed.
Inshallah. Shukran, Abu Rayyan. Thank you very much to all the panelists and all the speakers. We are really grateful, and all the attendees and whoever was involved in the Sukuk report as a contributor, as a sponsor. We are really getting a very positive feedback the way I see how the webinar started in the morning and till now it's been all positive. And from IFM perspective, this is really a very I would say helpful for us and make us even more confident in terms of contributing in the development of the industry. As we see, we can see clearly from this webinar, there are a number of points which are, for us as IFM also and for the industry development to take forward. One element which definitely we see is a good point about tokenization and what can be done in terms of, since our focus is more creating transparency, creating also standard forms. So this is something which we will be taking, I'm sure, forward. We are also sort of looking at, which is some time now, is some of you may be aware, looking at the carbon credits. And I think that's area, like Talat also mentioned, it's been with IFM under assessment. Sometime it takes a while for us to actually start something. But we really are aiming to have some consultative exercise on this particular subject. So if some of you may be involved in early initial discussions, and we would like to again, take this forward, inshallah. And this is something which require, of course, good discussion, creating, the element which are sort of, how to remove some, issues like green washing issues and all. Use of smart contracts is something which is also, yes, which is also something which we have to also look at it. And again, we have some initial assessment on this subject, but that can be done. Another important issue which was raised was Sukuk structuring and continuation of innovation in the structures, which I mentioned, and which are really we need to see. And if we receive a recommendation, we can certainly look into some other documentation, as Dr. Ahmed Ali had mentioned. Other important aspect is really looking at, what was presented by Indonesia also, and they are the lead in that, is looking at social development side, which is important. We are mostly, from IFM, has been focusing on up till now, on the financial side, which is important. There's a lot of things to be done there. But having said that, I think social development, cash-linked Waqf Sukuk kind of, instrument, how to make it more, sort of, others can also adopt the same, or sort of bring in some additional features in it, which we need to see. So this is another important area for IFM to work on and see. So these are some of the very, broad things which I can mention, since we already sort of exceeded the time. But I, from the beginning, knew that, the eminent speakers we have, we will get a good, input from them. We'll get a good guidance from them, which we achieved that purpose, alhamdulillah. And from lastly, but not the least, what our board member, Brother Ahmad, mentioned about IFM, the support from the institutions, who are basically, are aware of about our standards they have implemented. Really, we sort of, as any organizational infrastructure, if you see, in Islamic, on conventional, you need a larger, member group. So we need sort of, that sort of a membership, which is really we deserve, as we see today, what been discussed and what been, highlighted by, Dr. Al-Suwailem also, but Brother Nick and all others, who participated, also Dr. Zamir Iqbal also, and all the speakers. So this is something important for us. We will be, inshallah, like mentioned, this workshop which we have started. We are, inshallah, looking at some other jurisdictions that we are receiving a good response. Some of you have participated, and we are looking forward to that. And also, as mentioned, we are, inshallah, aiming to have our annual conference also to welcome you, maybe, inshallah, in person also. But this webinar has been indeed something which, we have been putting together, which gives us a good comfort in terms of, getting the feedback, and, what we are doing to further improve, inshallah. With that note, I would like to now end this webinar, and we look forward to, getting in touch with you soon, at either IFM consultative meeting or at the workshop or any, other event which we are now aiming to do for the next year. Till then, Assalamu alaikum wa rahmatullahi wa barakatuh.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
The only constant is change. See the world through an alternative lens, where economies evolve, borders blend. But one thing remains certain. Global businesses need a safe harbor. Welcome to Labuan. Discover a jurisdiction built on the strength of its past. Labuan IBFC, the International Business and Financial Center of Malaysia, intermediating your world. Promoted by Labuan IBFC Incorporated Sendiran Berhad, the official marketing agency for Labuan IBFC. Regulated, supervised, and enforced by Labuan Financial Services Authority Malaysia, governed by the Ministry of Finance Malaysia. Expect a fiscal and currency-neutral environment. Financial intermediation at its best. Robust and well-regulated center, conducive for business growth, where international standards are sacrosanct. A wholesale finance and business intermediation center with an eye on the future. Anchored by intermediation, innovation, inclusion. Your ideal intermediation hub for business, investments, and risk, where businesses thrive. In banking, corporate structures, Islamic finance, professional service providers, wealth management, capital market, and digital financial services. Let us be your Labuan. Labuan IBFC, the International Business and Financial Center of Malaysia.